CA GURURAJ ACHARYA, respected CA Manju Bashni, Secretary of Pondicherry branch of SIRC of ICAI, respected members of Pondicherry branch and members of other branches of ICAI, dear office bearers of Pondicherry, panelist members for interactive discussions, CA Meenakshi Sundaram and CA Kumraguru, and other distinguished participants, happy evening to all. We wish you all a happy and very prosperous New Year 2022. We are delighted to receive you all for this seminar on tax audit, changes and practical issues. At the outset, we apologize for converting the seminar from physical mode to virtual mode for administrative reason, and thank the speaker for accepting our request to present the same on virtual mode on the scheduled date itself. Thank you, sir. Ever-changing laws and increasing compliance requirements thrust upon the taxpayers cast additional reporting responsibility on the chartered accountants, and many changes have taken place in the area of tax audit. Moreover, there are perennial issues always associated with the tax audit. It is in this context we thought fit of having this seminar on tax audit to enable the members to enrich and update themselves on the recent involved in tax audit. We are aware that members will be busy with their tax audit schedule, but we are also aware that members are keen to abreast themselves of the complexities associated in current year tax audit. The participation of labs only points to say the same. We thank all the members. We are immensely pleased to extend our heartiest welcome on behalf of our Pondicherry branch to CA GURURAJ ACHARYA of Bangalore, who is the speaker of the day. We are thankful to him for having readily accepting our request and coming forward for a detailed presentation in an interactive participation manner. CA Kumraguru and CA Meenakshi Sundaram have joined the panel for an interactive discussion. We welcome you, sir. We also extend our warm welcome to them. Our speaker, CA GURURAJ Acharya, for his very presentation talk. He is very familiar to our Pondicherry branch and has very rich experience and specializing in the fields of direct taxes and audits. He is known for lively presentation of the topics, brings out thoughtful issues involved and solutions and methodology to overcome the same. And without doubt, today's session will be a brainstorming session, very interesting and interactive. We welcome you, sir, for this session. We extend our welcome to all the distinguished members of the Pondicherry and members of other branches and also other participants for this seminar. With heat gaining up for tax audit filing season, members will be busy in discharging their professional duties. In spite of the same, members have taken their valuable time to participate and attend this seminar on a very important topic. This gives us great delight and feeling acknowledged. We are very happy to welcome you all. With surge in Omicron and COVID-19 infections, we wish all the members a safe and good health. The term of the present management committee is coming to an end soon, and election for the next term of 2022-25 has already been announced. Notice inviting nominations for the next management committee has already been circulated. We request the members to come forward and take up the responsibility to take the branch to greater height and contribute to the alma mater. With these few words, I welcome you all for the program and requesting Secretary CM Manju Bashni to introduce the speaker to the participants. Thank you. Over to Secretary.
Thank you, Chairman. It gives me great pleasure to introduce the speaker of today's program, CAK GURURAJ ACHARYA. CAK GURURAJ ACHARYA hails from the temple town Udupi, brought up in the iron city Bellary, and is settled in the knowledge city of Bangalore. He qualified as a chartered accountant after completing articles under Messrs. Guru Prasad and Co. Bellary. He is presently the senior partner of KG Acharya and Co. Chartered Accountants, Bangalore, specializing in corporate finance, corporate taxes, and company law. His academic achievements include he has secured first rank in BCom from Gulbarga University, secured All India 21st rank in CA Intermediate and 10th rank in CA Final. He has also secured first rank in ICWA Inter and third rank in ICWAI Final. He is a member of the Financial Board of ICAI. He was director on the board of directors of State Bank of Mysore. He was a member of the Karnataka State Level Audit Advisory Board. He was a co-opted member of Expert Advisory Committee on Accounting published by Karnataka State Chartered Accountants Association. He is a resource person on accounting standards and standards on auditing, Companies Act 2013 and LLP, corporate finance and financial analysis, and corporate tax and tax audit. With these words of introduction, I welcome CA GURURAJ ACHARYA to this program. Welcome, sir. Over to you, sir.
Thank you, Manju Bhashini, madam. Your dialect, or I should say, the way you expressed was so clear. Probably that is why they have named you as Manju Bhashini. Your bhasha was so nice. Having said that, I would like to thank Mr. Prabhakaran for inviting me virtually to Pondicherry, although I would have loved to be in the midst of I know yesterday I was in God's own country, Kerala, but I think if there is a capital city for God's own country, that would have been Pondicherry. I mean, I would certainly have loved to be in your midst in the scenic setting of Pondicherry. Maybe in February again, Mr. Prabhakaran has assured that he will invite me physically, and I will certainly be there. Having said that, since we were not able to hear to the prayer song, I thought I will start with the prayer, because for all such functions, all such seminars, we need God's grace. So I always say, Vakratunda Mahakaya, Surya Koti Samaprabha, Nirvignam Kurume Deva, Nirvignam Kurume Deva. What follows, madam? Nirvignam Kurume Deva.
Sarva Karyeshu Sarvada.
Nirvignam Kurume Deva.
Sarva Karyeshu Sarvada.
Yeah, I slightly change it. Nirvignam Kurume Deva, Shubha Karyeshu Sarvada. I mean, whereas the original song says Sarva Karyeshu Sarvada, I always recite this and request Lord Ganapati to help me in signing not all the 3 CD reports. He should not enable me to sign some of the reports if there is going to be some danger in future. I should sign only those 3 CD reports which will have a good ending. So, Shubha Karyeshu Sarvada, let the Karyas be only Shubha, and let God direct me only in Shubha Karyas rather than in all areas. So why I'm starting off with this prayer is, let us not take up every audit that comes to us. Let us sometimes consider giving up of an audit as a pleasurable thing, if at all we feel that there is a risk in that particular audit. So that was my opening remark. Having said that, I thank the senior member Kumara Guru sir. You know, in Karnataka we had Mahabharata written by Vyasa. The sage Vyasa has written Mahabharata, and in Kannada we have another equally good author called Kumara Vyasa, who has written Mahabharata in Kannada. So, like that, sir, you are Kumara Guru. So I thank you for being with me throughout. And I had the good fortune of 10 days ago, I was in Madurai. 10 days ago, I was in Madurai. Now I have the the ruling DT of Madurai with me, Meenakshi Sundar with me. I shouldn't have, even if I had not gone to Madurai, I would have had the darshan of Meenakshi Sundar. That way, thank you, sir. Sundar sir. There me. I requested both of them to and Manju Bhashini. I would be happy if you are there throughout with your videos on, and you may look into your work and then decide accordingly. Having said that, I would request. I mean, as Mr. Prabhakaran was talking, I saw how many participants were there. There were 28 participants. I said that's a good number because business income starts with section 28. Business income starts with section 28. But then when Manju Bhashini started talking, there were 32 participants. I only felt a precision on the number of participants. Now, of course, I see about 39 participants, which is, of course, a good number in that sense. And all of us know that 39 section does not exist anymore in the Income Tax Act. It's a deleted section. So I would request all the 39 participants and any more to join to ask as many questions as possible. See, the point I'm trying to say, I will introduce to you what are all the new provisions for 2021 that one has to really take into account. Most important aspect that has to be taken into account is the new software, which fighting with the software is the biggest problem that chartered accountants are facing. We are doing the same work over and over again and wasting our precious time because of the software issues. Having said that, apart from that, the changes that have happened is what I'm going to discuss in the beginning. And then immediately I will open it up for question and answers. I have been sent 7 or 8 questions by CA Anand, very relevant questions. I will take up that and answer any issues. If you post some questions, I will be happy. If you don't post some questions, I will post some questions to you, and through that we will learn a subject. Having said that, before I go into the question, I would request Meenakshi Sundar to keep a watch on the Q&A box or in the chat box. If anybody wants to post their questions in the chat box, Meenakshi Sundar will read them out for me. However, people are free or at liberty to switch on their videos or raise a hand and ask the questions. Because it's a smaller crowd, we can definitely have a question and answer on a face-to-face basis. I would like to have this session on a face-to-face basis rather than a faceless basis. I mean, although we know faceless has become the faceless assessment in question. We talk about face assessment and strategies, the new strategies required to face the faceless. That is a topic which I'm talking. Probably if Prabhakaran invites me, I will come maybe after 15th of February and talk about the 10 commandments to face the faceless. In fact, that is the topic that I have coined, how to face the faceless assessment and what are the experiences that we have, because it requires a new skill set altogether under the revised environment. Kumar Guru sir, you may agree that 60 years, Income Tax Act of 1961 in 2021 completed 60 years. Shashtabdi Purti of income tax has happened. So after 60 years, the income tax, the act had to retire. Strictly speaking, the act had to retire. In fact, I would say it has retired. With the introduction of faceless assessment, it is a new Income Tax Act. None of the provisions have changed, but the approach to the entire scheme of income tax has altogether changed. All these days, in the last 60 years, we were respecting the income tax officers more than the Income Tax Act. Please listen to this. We were respecting the pujaris more than the God. But now the pujaris have been asked to hide behind the God. If at all I have to say, we have to respect the God, and God only can protect us. So what I mean by that is, if we comply with the Income Tax Act, then we don't have to worry about any of the pujaris or the officers. However, if we do not respect, if we do not comply with the law, then No amount of help. Even if the officer wants to help, he cannot help me, because under the faceless assessment, it is not one officer, it is a dynamic jurisdiction, concurrent jurisdiction. Dynamic means, very in simple terms, my officer is not my officer. My jurisdictional officer is not my officer. Other than him, anybody else can be my officer. He may be sitting out of, Pondicherry may be assessed in Himachal Pradesh or Punjab or Maharashtra. It will not be assessed in Tamil Nadu bar Pondicherry. Similarly, Bangalore can be taken up by Sikkim officer. So like that, it will crisscross the country, and that is meant by jurisdictionless and concurrent. Concurrent means two officers can simultaneously be having a jurisdiction over me. Although two officers will not take up my case simultaneously, the National Faceless Assessment will actually pick up the case and give it to a particular officer for the assessment. They are called the assessment unit. Whatever assessment is done by the assessment unit, probably, let us say, Pondicherry case may be taken up by an officer sitting out of Amritsar. And the officer who has done the assessment will send his assessment order, draft assessment order, to the National Faceless Assessment sitting out of Delhi. That Delhi office will again send that particular file, the electronic file, to an officer, say, sitting out of Mumbai for review. So there is an assessment unit and a review unit. The assessment unit will not know who the review unit is. The review unit will not know who the assessment unit is. So it is all done in compartments, and in each unit, assessment unit, two officers, the assessing officer and his jurisdiction and his head, what they call the range head, as well as the review unit officer and the review unit head, range head, will look into the file. So concurrent jurisdiction, and in case the review unit accepts, then the order will be passed. If the review unit has got any reservations, why did you add that, you should have not added it, or if they say that this additional thing had to be added, then the matter will be referred to a third umpire, they call the second review unit, again, whose decision will be final. So it is a concurrent jurisdiction, jurisdictionless. So a lot of changes in the faceless assessment, and it is only those who know the law, who comply with the law, will be able to survive in the current scenario. Now, earlier days, we could have given the tax audit report, taken it back in case there is a mistake. Under the e-assessment proceeding, once it is filed, it is filed. But under the faceless assessment, it is still more dangerous. When I don't even get to know the officer if I have committed any mistake. So with this background, we need to approach our audit. That is why I said, let us do only that audit which will protect us forever. And if there is any non-compliance, we need to bring that in the tax audit report itself, rather than talking to the officer and pleading before him, sorry, sir, I forgot to report that, and all those stuff. Nothing of that sort will help. So having said that, before I start my tax audit session, I wanted to bring about 5 very important points which may be of use during the current season. One of the thing is, let us say that we have got a partnership firm. We have a partnership firm with the two partners. Kumaraguru sir, if one of the partner dies, what is the implication of such a firm on its assets and liabilities? If there are only two partners and the partnership firm has got a lot of assets, I'm not even talking about the revised section 9B or section 45, whatever changes that have happened. I'm not talking about that. If there are only two partners and one of the partner dies, what will happen to that particular firm? Will the firm continue, or will the firm be deemed to be dissolved? That is my question. Kumaraguru sir, what is your view, sir? Please unmute, sir.
Sir, it is deemed to be dissolved, sir.
Meenakshi Sundar sir, you have any other view? Let us say the partnership deed has a clause saying that on the death of a particular partner, his son will be inducted to the firm and the firm will continue. That is a clause in the partnership deed. What will happen to such a situation?
The firm will continue, sir.
That is the case, the firm will continue.
In that case, the firm continues is what is the opinion. Sir, let me take you to one of the interesting Supreme Court decision of Parvati Ammul reported in 1987 ITR 161. I'll repeat, Parvati Ammal case, 1987 ITR 161. It was held. I'm telling that it was held that that in a firm consisting of two partners, on account of a death of one of the partner, the firm automatically dissolves, and the firm automatically dissolves. Although Chetan writes that firm will continue if deed is clear with legal hair. This is what we think. Legally, on the death of a partner, the firm gets dissolved, and it was so held in Seth Govindaram Sugar Mills. Seth Govindaram Sugar Mills reported in AIR 1966 Supreme Court decision of 24. It may be pursuant to the wishes or the directions of the deceased partner. The surviving partner may enter into a new partnership with the hire of the deceased partner, but that would constitute a new partnership firm, is what was held. So what is the take-home point? I mean, although if we have done such a situation and it has got unnoticed, probably I did not know and the officer did not know and it happened like that. But I would always suggest that it is always better to have three partners in a partnership firm, because if one of them dies, at least two will continue with the partnership firm without any legal complications. So this is my suggestion. Also, this is equally true in the case of a private limited company. Although in the case of a private limited company, the death of one shareholder or one director will not automatically make the company sole proprietorship or dissolved. There, I would only say, for the sake of administrative convenience, it is always better to have a three-member minimum member and a three directors, so that if one of them dies, especially because of COVID and other situation, we also have this GST filing. If the person who is in charge dies, it becomes a very difficult thing to bring the other person as a authorized signatory. So for the GST purpose or for whatever, it is better to have two signatories than one signatory. So this is a point I wanted to say as a opening remark. The second point I wanted to say was with respect to capital gains account scheme. Now, all of us are aware that whenever I sell a property, if it is a residential property under section 54, if it is a non-residential property subject to certain condition, if I invest in a residential property, I have to invest in the case of 54, the capital gains. In the case of 54S, if the entire sale proceeds in the new property within 2 years for purchase and within 3 years for the purpose of construction. Now, 1 year before purchase, 2 years after purchase, or 3 years thereafter construct. Now, until the due date of filing the income tax return, if I do not invest this in a property, I have to invest the capital gains amount or the sale proceeds, as the case may be, in a capital gains account scheme. Right, sir? It has to be invested in a capital gains account scheme. Either it could be a savings bank account or a fixed deposit account in a nationalized bank. And whenever I construct it, I take it out of that, failing which at the end of the required term period, it will be subject to capital gain in that year. Very interestingly, although I have sold it in the 0th year and I have got time to invest in the next 3 years. So if I do not invest it in construction of a new property by 3 years, in the 3rd year, the amount has to suffer the capital gains, which was claimed as an exemption in year 0. And that is very clear. Now, my question is, in the 2nd year, the person wanted to construct or wanted to buy, and the 2nd year, Mr. A, who had invested in this capital gains account scheme, dies. He dies. So what happens to the capital gains account scheme? Kumar Guru sir, what is your, should the legal heirs, let us say A has got Mrs. A and his 2 children, do they have to comply with the requirement of buying the house and or are they at liberty to withdraw?
It is not taxable in the legal year sense, sir.
Can I go to the bank and say, no, give it back to me?
No.
I mean, that's the question. So
no,
what is the way out?
I have to apply with the assessing officer.
Yeah, you have to apply. Should the officer say that no, the purpose for which it was kept by your deceased person was to purchase a property or construct a property. Since that has not happened, I will not allow. If he says that, what is the recourse to me? Meenakshi Sundar sir, let me tell you, there is a beautiful circular, please note down. Circular number 743, dated 6th of May 1996, which very clearly says that on the death of a particular person, whoever has invested in capital gains account scheme, the legal heirs are under no obligation to invest this particular proceeds in a for the purpose for which it is kept. So at their liberty to approach the officer or the bank showing this. If the bank does not give, I will ask the officer to direct the bank. In any case, it has to be given. I was just thinking they have not given the logic behind this circular, but logic we can probably decipher by saying that after all, this property, if they were to invest it, they had to again bifurcate between the three and share it. So not to go for that particular legal process, they said the money itself is fungible rather than the property. The money itself is divisible rather than the property. So money without obligation, maybe to that extent, the statutory provisions have been considerate. They have been very liberal in taking that particular view. Circular number 743 of 1996 is a circular which we can quote. The next very interesting case law, which I wanted to I'm slightly going beyond tax audit. I felt that these are things which are required for us to know, because tax audit has been there since 1984. I will talk about the changes. I mean, not that I will not talk about tax audit, but one very interesting thing which I came across, which I felt was not possible, and now it is possible. Let me tell you the issue. Sir, I have a brought forward business loss. Of about 3 crores. And current year, I sell a property. Please understand, I'm a private limited company. I had a 3 crores of, or a partnership firm, or a proprietorship concern, whichever it is. I had a 3 crores of brought forward losses. And if it is a private limited company, there has been no change in the shareholding, because section 79 says if there is a change in the shareholding of more than 51%, I cannot claim the loss. Similarly, in the case of a partnership firm, section 78 says, to the extent of the change in the partners, I will have to give up the share of the loss. I mean, if 25% of the partners have left out of 3 crores, I can claim only 2.25 crores as the loss in the case of the continuing partners. So that is how the section 79, 78, we have to in fact comment about this in the tax audit report, at least on section 79, not on 78 though. Now my question is not that. My question is 3 crores of unabsorbed business loss I have in the financial year 2021. At the beginning I had last year, for last 5-6 years, I have been having losses. 3 crores is the business loss that I have carried forward. Now in 2021, I sell a land and building belonging to my business. In 2021, I sell and make a gain, capital gains of 5 crores. Now my question is, can I set off this current year capital gains with my brought forward business loss? Sir, the answer for that is given. I mean, all of you may be sitting in your offices also. You can have the Income Tax Act with you. Section 72, subsection 1, clause 1. 72, subsection 1, clause 1. Okay. Very interestingly, sir. Chandrasekharan, sir, please don't share the screen. You are sharing the screen. Yeah, thank you so much. Yeah. So what I was trying to say is, section 72, subsection 1, clause 1 is very interesting. It goes on to say, let me ask Meenakshi Sundar sir, what is your view? Popular view is that capital gains brought forward business loss. Can it be offset, sir?
Conventional view is not possible, sir, but I think there is a decision recently from Karnataka High Court which says it is possible, sir.
Yes, sir. Fantastic.
And
you know what? We were under the popular view. We were under the general. We were. Let me use it like this. We were under the chartered accountant view. The chartered accountant thinking is different from the advocate thinking. You know, advocate thinking is different, and chartered accountant thinking is different. In fact, this case was argued before the Karnataka High Court by my very good friend Shankar, who also happens to be a chartered accountant and an advocate. And very beautifully it was argued. And if you look into, so what it says is, if you read 72(1), see, normally they have used the word head of business income. But in 72(1) clause 1, they go on to say that the capital gains can be adjusted, the business loss can be adjusted only against business profit. Okay, they did not use the word brought forward business loss can be adjusted only against business income. Please look at this. In 72(1)(1), they use the word business income. They did not use the word head of business income. Let me make a distinction. For a businessman, let me put it, sir, for a businessman selling land and building pertaining to his business, is it his business income or personal income? You look at the way that they have argued. Is it a business income or a personal income?
It's a business income.
It is not a personal income. If you look from a businessman's point of view, he doesn't know the head of income. I mean, we always say Ravana has had 10 heads and income tax has 5 heads. That is how we keep telling. Income tax has 5 heads. So this is for the chartered accountants and the income tax department to know the head of income. But for a businessman, for him, everything is profit or loss. And that is why in the profit and loss account statement, even this profit or loss on sale of land and building gets credited to profit and loss account. It does not get credited to the balance sheet or the capital account directly. So for him, everything is business income. So looked and argued from this point of view. And that is why, very interestingly, sometimes a tribunal member, the accountant member will be there. You can't confuse him or you cannot convince him. When it goes to the court, the advocate is only from a BA LLB. I mean, we can easily probably convince him, saying that sale of land, sir, is it a business income or whether it is a personal income? If I say, he'll say it's a business income. And if you look into 72(1)(1), sir, it says brought forward business loss can be adjusted against business income. So therefore, this is a business income of 5 crores. I have a brought forward loss of 3 crores. Knock off this and I will have 2 crores off, on which I have to pay taxes. So this is the argument that was held, as rightly told by Meenakshi Sundar, that it was held in Nandi Steels 2021. Nandi Steels 2021, 128, taxman 267, Karnataka High Court. And of course, when this was argued, they also took recourse to one of the Supreme Court decisions of GVK Industries Limited, 2011 case, 332 ITR 130, wherein they said that no, I mean, the court cannot import a word which is not there in the act. I mean, this has been held in several decisions. So you cannot now interpret to say the head profit and gains. So that's a beautiful decision. We should make use of it for the simple reason that, Sir Kumar Guru, sir, you may be aware, why do business people sell assets, sir? Normally, they are in the habit of acquiring asset. If they sell an asset, maybe they have a business exigency or a business loss. There is a business loss. Now, if you tell them that that particular business loss is different from this gain that you're making, he will say, sir, for me, everything is one pot. You are putting it into different tiffin carriers and telling me different. For me, everything is one. So that's a beautiful way of arguing. I think this is how we should have our mindset to proceed further. The next issue I would bring out is on 80JJAA. I don't know how many of you are claiming the deduction under section 80JJAA. Meenakshi Sundar, sir, are you claiming 80JJAA?
Yeah, one of the cases. One of the cases.
In fact, let me tell you, you can claim it in all the cases wherever possible. Now, what is this 80JJAA? Let me give you an introduction. And this section is one of the most beneficial section that is there in the Income Tax Act to incentivize employment generation. So whoever adds employees, of course, the salaries and wages can always be claimed as a deduction by debiting to the profit and loss account and claiming it as an expenditure. If I have paid, let us say, during the year, 10 lakh rupees salary, and in the next year, I employ, let us say, 10 new employees. I add 10 new employees. In 2021, I have added 10 new employees, and this 10 lakh rupees has now become 15 lakh rupees. 5 lakh rupees of additional salary I have paid per month. 5 lakh rupees additional salary I have paid per month. Now, this entire 15 lakhs I can debit it to my profit and loss account. But in 80JJAA, it says on this new additional salaries of about 5 lakh rupees, you can claim 30% of this as a deduction for the current year and the next 2 years. Current year and the next 2 years. Let me repeat. Until last year, I was paying 10 lakh rupees. During the current year, I employed certain new employees to whom I paid 5 lakh rupees extra per month. Okay, so 5 lakh rupees plus 10 lakh rupees became 15 lakh rupees. So 15 into 12 becomes 180 lakh rupees. So 1 crore and 80 lakhs is the total salaries and wages that I have paid. Now, in this, the salaries and wages I have paid to the new employees is about 60 lakhs. 5 lakhs into 12, 60 lakh rupees. So the entire 1 crore 80 I debited to my profit and loss account, and I can claim it as an expenditure. Next, this 60 lakhs into 30%, which comes to 18 lakh rupees, I can claim it as a deduction in financial year 2021, then 21-22, again in 22-23. So that is the provision of beauty of section 80JJAA. Let me also tell you some additional beauties of section 80JJAA. It is, like people who are claiming 115 BAA or BAB. What is BAA, BAB? For companies, they have an option of going under the old scheme of 25% or 30%, or to opt under the new 115 BAA at 22% or BAB at 15% available to new manufacturing companies, or BAC, the new one which we are now talking about. BAC is very popular. You go in for a reduced rate by surrendering various exemptions and benefits. What are the various exemptions and benefits? By now, all of us are clear, because this time we have already filed our 31st December returns. In the case of a salaried person, no LTA, no standard deduction. In the case of a businessman, no additional depreciation. In the case of everybody, no deduction on account of minor children, the 1,500 rupees for 2 maximum children. No deduction on interest on self-occupied property under section 24B. And no deduction under chapter 6A. You cannot claim any deduction under chapter 6A except 80JJAA. Now that is the beauty of 80JJAA. 80JJAA says you can come under the liberal route, lower tax rate route of 115 BAA, BAB for companies, BAC for individuals, and BAD for cooperative societies. And yet you can claim the benefit of 80JJAA. For companies, another exceptional section is section 80M. 80M is when you receive the dividends, and a company receives the dividends and it is in turn giving dividends, they can get a benefit of the double taxation on dividends by claiming deduction under section 80M. So 80M is also available along with 80JJAA, even for a company which is paying under the optional reduced scheme. So that is the beauty of 80JJAA. Now, before we talk about 80JJAA, is it available for all cases? There are certain conditions. Now we have to understand what the conditions are. Condition number 1, the firm should be subject to tax audit. The firm should be subject to the concern, the business should be subject to tax audit. That means only an enterprise which is subject to tax audit can claim 80JJAA. I'll come to that a bit later on, saying that there is a confusion there. Point number 2, the additional employees' salary should be less than 25,000 rupees per month. So if some salary is more than 25,000 rupees, they are not considered as new employees for the purpose of 80JJAA. The third, all of these salaries which you pay to them should be in permitted modes. So what do you mean by permitted modes? Let me tell you, there are 11 permitted modes. When I'm talking about permitted modes, now I'm also getting into the tax audit sections. Sections are 40A3. Cash payment of more than 10,000 rupees will not be allowed if it is not done in any of the 11 permitted modes. Similarly, section 269 SS, 269 ST, 269T, then I can extend it to 56.210, section 43 CA, like this, various sections which talk about the permitted modes, talk about 3 modes within the section and 8 other permitted modes in the rules. Now, what are the 3 permitted modes within the section? Account paid check, account paid draft, and electronic clearing system of the bank. So these are the 3 permitted modes within the Act. Plus, there are 8 other permitted modes through the rules. Now, which is the rule, sir? Which is the rule?
6 double BA. Double BA.
ABBA, right? I think 6 ABBA.
ABBA, yes, sir. Yes.
I always call it as, Maraguru sir, you may be happy to know there is Bonium and Abbas, they were the 2 popular brands of those. Then came Spice Girls, and now it is, of course, a lot of people. Then came Michael Jackson. 6 ABBA, easier to remember. 6 ABBA, they talk about 8 other permitted modes. 8 other permitted modes. So what are the 8 permitted modes? Very simple. Credit card, debit card. You can pay through credit card, debit card. Net banking. I mean, whatever we are doing, please note that net banking is different from electronic clearing system of the bank. Electronic clearing system of the bank is what we give as a ECS instruction to the bank to pay the water bill, electricity bill on a regular basis. That is not considered to be net banking. What I am doing on a internet banking is net banking. Number 4 is IMPS. Number 5 is UPI. Number 6 is RTGS. Number 7 is NEFT, and number 8 is PIB. So these are the 8 permitted modes apart from the 3 permitted modes within the section. So I call them as the 11 permitted modes. They are the 11 permitted modes. Now, for claiming deduction under section 80JJAA, and for that matter 40A3, 269 SS, 269T, 269 ST, 56.210, 43C, 43CA, all these sections talk about these 11 modes only. You cannot have any other mode. Even if it is done through a journal entry, it is considered to be required to be reported in the tax audit report. Whether or not a penalty will be levied is an option that is available with the assessing officer. So if there is any loan which has been squared off, I have to pay B, I have to receive from A. So what I do is I square off an A to C entry directly. So my loan to C, which I have to pay, gets, I tell that you collect it from A, and I pass an entry in my books of accounts. That is a payment, a loan which has been cleared otherwise than the permitted modes. Should I report it? The answer is yes. I should report it in my tax audit report because it is not done in any one of the 11 permitted modes. Will it be subject to penalty under 271 DA or whatever that section is? The answer, 271D and 271E and 271 DA for 269 ST. The answer is may not, if you have a genuine reason. So having talked about that, now first section, subject to tax audit, 80JJAA. What are the conditions? I should be subject to 80JJAA. I mean, I should be subject to tax audit. The salary that I pay should be less than 25,000 rupees per month. The third one is he should be paid in permitted modes. The fourth and the very tough condition is all such employees should be covered under Provident Fund. This is one of the tough conditions. Maybe in our office also we will have some new employees. If my office is subject to tax audit, I could have come under 80JJAA. But some of most of my employees may not be covered under 80 PF, but they should be covered under PF. The fifth condition is they should have worked for at least 240 days in the first year. 240 days in the first year. There are exceptions provided to certain categories of textile employers, footwear employers, and things like that, where even 150 days in a year is sufficient. So if they work for more than 240 days in the first year, then they will be considered as new employees. But very interestingly, if I have employed a person in the month of January, naturally he's worked only for 90 days. Suryanarayan sir, please mute. Suryanarayan sir, please mute. Yeah, thank you. So, if I have employed an employee in the month of January, he has obviously not worked for more than 270 days. But next year, if he continues with me from April to March, then if he has worked for more than 240 days, in that year, I can consider him as a new employee. That is the beauty of it. So 240 days, he should have worked in the new year, in the first year. And the most important sixth section is a chartered accountant should give a certificate that he is eligible to claim the amount of deduction he has to give by saying that he has complied with all the above conditions. Which is the form, sir? 56F?
10DA.
Yeah.
10,
Form 10DA.
10DA.
Form 10DA. Yeah. I think Form 10DA is the form in which the certificate has to be given. So these are the conditions for 80JJAA. Now let me bring out certain very good issues on 80JJAA, because I have to, apart from giving Form 10DA, please understand, even in 3CD report, I have to say what is the 80JJAA deduction that he is entitled to under Chapter 6A. You know, the particular clause where Chapter 6A deduction entitlement, I have to give this particular figure. Now my question is, in one of the companies which the income tax department conducted a survey, you know, it was a big news item, Pest Corp Bolke in Bangalore, where they employ a lot of employees. Their job itself is providing employment and sending them to different places for housekeeping and whatever purposes. So they had about 10,000 employees. Every year they had about 1,000 employees. So in that context, the department went in for a survey and came out with the following observations. The first point they said objected is, the company had claimed 25,000 rupees per month as average salary, which means if somebody had joined in a particular year at 20,000 rupees and by the time he became 28,000 rupees in that particular year, will he be eligible? The company said on an average, his salary is less than 25,000 rupees per month. Therefore, he is eligible. Whereas the department said the salary, the wording used is 25,000 rupees per month. It is not average salary. So this was objection number one. What is my view on this? I feel the department is right. I feel the department is right. It is not a case of average salary because the word average is not told. Again, just like what we said, a particular word cannot be imported into the act. Also applies to me. It is not only for the department. So therefore, I feel that the department is right. The second objection, I mean, I don't know, maybe the advocates can treat it otherwise. But I mean, I am a compliant citizen, so I would like to be on the right side. The second deduction, the objection which the department raised was 25,000 rupees. A person's salary was 24,500 rupees. They were giving about 1,000 rupees for newspaper, for travel allowance, for various reimbursements, telephone expenses. Now the question is whether these reimbursements have to be considered as salary or not. What is your view, Sundar sir?
I think that section uses the words total emoluments.
Total emoluments. I would put it like this. See, if it is a case of reimbursement, whether reimbursement is an emolument, there could be of two types. If the company is giving 1,000 rupees every month to every employee, then it may look like it is an emolument. But if he says, you give me the actual bill, I will reimburse the actual bill. Then I will put it in my books of accounts also, not under the head salary. I will put newspaper under newspaper heading and telephone under telephone heading. So I would argue that if the way in which it is paid determines the character of that particular expense. And I would argue it both the ways depending on the situation. Right? The third objection which the department raised, this is very interesting. The third objection which they raised is the new employee should continue with the business for the next 3 years. Because you are claiming the deduction for the next 3 years, the department says that such an employee should continue with the employer for the next 3 years. Sir, what is your view? Kumar Guru sir, what is your view?
Sir, it is correct. Continue with the same employer for 3 years.
What is your view, Meenakshi Sundar sir?
I don't think that condition is there in the section. No.
So see, the benefit is given for 3 years. Does not mean, and the conditions of the employee for the first year, 240 days, and is told very clearly. Subsequently, he should be continuing in employment is not told. So I am of the opinion that, again, the department cannot read additional words into the section. Now you may say, then why did they use the word 3 years? I would argue it in a different way. Sir, I would argue it in a different way. I would say the department, I told you 60 lakhs in one of the cases that I took up, 60 lakhs into 30% is 18 lakhs. 18 lakhs, 18 lakhs, 18 lakhs, next 3 years I can claim. In fact, the finance minister, whoever introduced 80JJAA, wanted to give 90% of 60 lakhs in first year itself. 90 lakhs, 90% of 60 lakhs, which comes to about 54 lakhs in the first year itself. But some secretary, I'll just say, some IRS officer, he said, sir, 54 lakhs, if you give, my revenue will be lost. So therefore, let us spread it over for 3 years. So the employment generation is important. Of course, employment continuation is also important. I would not say no, but I cannot read more words than what it is already there, no more conditions than what it is there. So I feel that this argument of the department is wrong. So these are the 3 objections with respect to 80JJAA. And we also talked about the benefit of 80JJAA is also available to a company which is claiming 115 BAA, BAB, BAC option. Okay. So with that, I come to the end of the first bit of my talk today. Any questions? We have already completed 1 hour. Any questions on tax audit posed by anybody? We can take it up.
Sir, one question. A partner who was retired during the year, can we provide remuneration to him, sir? The ITR schema seems to be disallowing that.
I would always say one thing: the schema or the form cannot dictate the act.
That's
unfortunately.
Is there any legal basis to that?
Until the date of retirement.
Whatever.
Until the date of retirement, you can certainly consider him as a partner, and a partner is entitled. After the date of retirement, he ceases to be a partner, and as an outsider, he can always be given as a remuneration. He ceases to be a related party unless he is otherwise related to the partners. The restriction of 40B5 will not be applicable after he retires. So these are the points to be considered. Yeah. Yes, sir. Any more questions, sir?
No questions are there in the chat box, sir.
Yeah. I will now take up the questions. I don't know if Mr. Anand is there. Can you please switch on your audio and tell that you are there so that I can take up the nice questions that you have posed, Mr. Anand.
Anand, can you switch on the video?
Anand?
I don't know.
Yeah, he's there.
He's there, sir. He's there.
He's there?
Yeah.
Yes, he has come online, sir. Yeah.
He's come online. Okay.
Sir,
then I will take up his question.
Mr. Anand.
Yeah, I will take up his questions. Very nice questions he has posed. So I thought, let us make it relevant by, or probably, yeah. Can you see these questions, please?
File is still not open, sir. We are seeing only the folder.
Yeah. Has it now come?
No, sir.
No, sir.
Only that folder.
It came and went?
No,
yeah,
sir.
No, sir.
Only the folder was visible, sir. Yeah.
Okay. I think I have to do it in a different way.
Share the next screen. Yes, sir. Yeah, now it's visible, sir. Yeah.
Yes, sir.
Yeah. They always say, if you have a problem with the car doesn't start, you should get down from the car, all of you, and then get inside, it will start. That's all in computer also. Okay, having said that, nice questions posed by Anand. Clause 8, 44AB, Clause A, proviso where aggregate cash receipts and payment exceeds specified limits. That is the clause which talks about if you, I mean, all of you have your tax audit reports or income tax rules or the questions. If you read clause 8, it reads very interestingly, indicate the relevant clause of section 44AB under which the audit has been conducted. Now here, there are 5 sections which are, if you normally we know A, B, C, D, E. Under 44AB, under which section are you actually doing the audit? Are you doing it under 44AB clause A, which is applicable in the case of any business which, let's forget about the thing. We'll come to what is the tax audit provision. The tax audit provision is business income more than 1 crore, business income more than 1 crore, professional income more than 50 lakhs, Then comes the very interesting 44AE. 44AE, in the case of those who are in the business of hiring and leasing goods, transport carriages, less than 10 goods carriages, there is a presumptive profit, 7,500 rupees. If it is less than a particular tonnage, I think 12 tons, and more than 12 tons, it is 1,000 rupees per ton. So that is the presumptive taxation for 44AE. It is also so for 44BB and BBB, which are hardly used sections. This is for shipping tonnage tax, what we call. Maybe Pondicherry you have C, and therefore shipping is possible. In Bangalore we don't have, so therefore we don't refer to that particular section. Otherwise, we have 44ADA and 44AD. So what is 44ADA? In the case of a specified professional, whose turnover is less than 50 lakhs, he shall compulsorily show a profit of 50%, presumptive taxation. He shall compulsorily show a profit of 50%. Otherwise, get it audited under section 44AB, clause D. Clause D. That is what is the 44AB clause D. Now, 44AB clause E is very interesting. In the case of a businessman whose turnover is less than 1 crore or less than 2 crores, let us put it now for 44AB AD cases is up to 2 crores. Although the normal thing is 1 crore, now we have a 2 crore. If you opt for, let us make the distinction between 44ADA and 44AD. In 44AD, for a businessman to come under the presumptive profit is an option. If he decides not to exercise that particular option, he may maintain books of accounts, comply with all the provisions applicable to a businessman in the Income Tax Act, and say, I will not even get my books of accounts audited. I will show 3% profit, but I will maintain books of accounts. I will do TDS, etc. 44AD says, if a person has opted to come under 44AD, in that context, he need not comply with any of the conditions as told from 28 to 44A. He need not comply with 40A1A. He need not comply with 40A3. He did not be burdened with the 40A2B. All these restrictive conditions will not be applicable as long as he chooses 44AD and shows the presumptive profit of 8% or 6% as the case may be. Now, what is the 6%? We know that on the turnover, if the receipts of the business are in any one of the 11 permitted modes. Now we know what the permitted modes are. There are 3 modes as told in the Act and 8 modes told in the Rule 8 ABBA. 11 permitted modes. Then your minimum profit that you can show in the case of a businessman will be 6% as against 8%. Now, please understand, this option reduced 8% to 6% is available only for 44AD cases and not to ADA cases. AD is applicable to business, whereas ADA is applicable to only a specified professional. Now, who is a specified professional? Specified professional could be a chartered accountant, a company secretary, a lawyer, an engineer, a doctor. No, these are all the sports person, a film personality. All these things, people come under the specified professional. All these people come under specified professional. Now, very interestingly, these specified professionals do not have an option. They should come under 44 ADA. Whereas in the case of a businessman, if he decides to opt for 44 AD, then he will come under 44 AD. Otherwise, he can come under the regular scheme of income tax. Now, once he chooses, this is very interesting. This year, I choose to come under 44 AD. That means from next year, I should comply with 44 AD, presumptive tax of 8% or 6%, once I choose. So that is how 44 AD is built up. And the audit which I do under 44 AD will be done. Suppose he is showing less than 8% or less than 6%, I should carry out the audit of such a person under 44 AB clause E. Clause E. So that is how 44 AB has got A in the case of those business entities whose turnover is otherwise more than 1 crore. It could be, let us say, a partnership firm whose turnover is 3 crores. Then I will go under 44 AB clause A. If it is a case of a professional whose turnover is more than 50 lakhs, then 44 AB clause B. Transport, higher goods carriage, 44 AB clause C. If I am doing an audit of a specified professional whose turnover is less than 50 lakhs, but he's showing a presumptive profit of less than 50%, then I have to carry out the audit. That is the audit done under 44 AB clause D. And finally, 44 AB clause E is done in the case of such a business entity who had earlier opted for 44 AD and has now shown a profit of less than 8% or 6%. Are we clear, sir? Are we clear? Now, very interestingly, what happens when you are doing an audit of a company, of a private limited company? Now, look at this beautiful thing. Now, where a company is already audited, under the any other scheme, we know that we have to use Form 3CA. What is the difference between 3CA and 3CB, sir?
3CA, it is audited under some other law.
If it is already audited under some other law, then use Form 3CA. Otherwise, use Form 3CB. Now, what is the otherwise difference between 3CA and 3CB? If you look into the contents of 3CA and 3CB, it's very interesting. 3CA says the financial statements have already been audited by so and so. The financial statements audited by so and so or by me is annexed to this financial to my audit report, and the information that is required to be furnished to the income tax department is given in Form 3CD, and my observations, if any, on Form 3CD is given here in below in clause 3. Look at this. 3CA has got only 3 clauses. Whereas 3CB has 5 clauses. Additional 2 clauses. Why additional 2 clauses? Let me tell you. First clause goes on to say, I am auditing the financial statements of the entity for the first time. I am auditing the financial statements for the first time. And such a financial statement is appended. And it says under clause 3 there, the observations with respect to the financial statements are given here in below. Under clause 3 of 3CB, I am going to give the observations on the financial statements. Look at this. The observations which I would have given in the case, if it were to be a company, in the main audit report, under SA 700 or 705, normally 705 is the observations where I give. Using SA 705, I give a qualified audit report. The qualifications with respect to the financial statement, which I would give it in my normal audit report for a company, for a non-company, I will give it under clause 3 of Form 3CB. We should not confuse the qualifications of 3CD in clause 3 of 3CB. The qualifications on 3CD somebody, I think Mr. Anand has only asked, what happens if they don't maintain a day-to-day stock register? Day-to-day stock register is not a books of account for my purpose. I will, but for the purpose of tax audit, there is a requirement, give the quantitative details. Means I will say day-to-day stock register has not been maintained. So that is an observation on Form 3CD, which I will give in clause 5 of 3CB or clause 3 of 3CA. So clause 3 of 3CA and clause 5 of 3CB are the same. So clause 4 of 3CB says the information required to be given are given in Form 3CD, which is annexed, and the observations on clause 3CD are herein provided is given in Form 3CB. So that is a fundamental difference between 3CA and 3CB. Now, sir, now in the case of a company whose turnover is, let us say, very interestingly, we talked about 1 crore, 50 lakhs, 2 crores. We have talked about 3 limits now. Let me introduce another level of turnover called 10 crores. You know, for financial year 2021, assessment year 21-22, what we are doing the audit, they have introduced 10 crores as another cutoff. Last year it was 5 crores cutoff. Now they have made it 10 crores cutoff. What is this 10 crores? In the case of a business, whose turnover is up to 10 crores, you don't have to subject it to tax audit. You don't have to subject it to tax audit if 2 conditions are complied with. Condition number 1, all the receipts you sum it up in your receipts and payments in your cash book, less than 5% of your total receipt is in cash. They use the word less than 5% is in cash. They don't use the word permitted modes. They use the word cash only there. Less than 5% of your total receipt is in cash. And condition number 2 is less than 5% of your total payments are less than 5% are in cash. In that context, you don't have to subject him to tax audit as long as his turnover is less than 10 crores. So let us understand when 1 crore, when 50 lakhs, when 2 crores, and when 10 crores. Now let us make it things very simple. 2 crores is applicable if a person has chosen to come under 44 AD and he is an eligible assessee. Who is an eligible assessee? An eligible assessee is an individual, HUF, or a partnership firm not being an LLP. Only these 3 people are considered to be eligible assessees under 44 AD. So then naturally, for a company, a private limited company, or for an LLP, they cannot come under 44 AD. So whoever can come under 44 AD is only these 3. So, and if they have chosen to come under 44 AD, you don't have to do the tax audit as long as they are showing 8% or 6% and their turnover is up to 2 crores. So 2 crores we have solved. So to whom is 50 lakhs applicable? It is applicable to all professionals. Please understand. 44 AB says for all professionals, whether or not they are specified professionals. There is a distinction between professionals and specified professionals. For specified professionals, 44 ADA applies. 44 ADA applies where they say in such a case, minimum 50% they have to show if their turnover is up to 50%. I mean, up to 50 lakhs. But in the case of all professionals, if their turnover is more than 50 lakhs, compulsorily, even if they show 50% profit, it should be subject to tax audit. So that is very clear. Yes, Mr. Meenakshi.
There is a question from Danya, sir.
Can I just finish off this and then take the question?
Yes, sir. Yes,
I'll come to a question station. Yeah. So we talked about 2 crores. We talked about 50 lakhs. Now let's go to 1 crore. To whom is 1 crore applicable? To whom is 1 crore applicable? Or rather, we'll finish off the exceptions. The exception is 10 crores. We'll finish off 10 crores. And to whomever that 50 lakhs, 2 crores, 1 crore, 10 crore is not applicable, for them it is 1 crore. I think that is a better way to answer. So whom is 10 crore applicable? 10 crores is applicable to every businessman, not to a professional. Because this is carved out only for business people. including companies, including public limited companies, if their turnover is up to 10 crores and their receipts and payments are less than 5% of their total receipts or total payments respectively. In all other cases, it is 1 crore. In all other cases, it is 1 crore. So that is how there are 4 cutoffs which one should be aware of. Yes. Now let me go to the question of Mr. Danya.
Yeah, Danya's question is, if a professional covered under 44AA is declaring more than 50% of the total gross receipts voluntarily, then should we declare that he is complying with 44ADA?
No, the point is his turnover less than 50 lakhs or more than 50 lakhs? His turnover should be less than 50 lakhs.
Less than 50 lakhs. Sir.
Then where is the question of coming to audit? There is no question of audit at all. Where will you declare? Where will a chartered accountant declare? The question does not arise. Danyaji, I hope I have understood your question properly. Otherwise, you can unmute and ask. Okay. So the point is, so we have understood the cutoffs now. Now we will come to a very interesting point. Yes, please. If you have any questions, you can ask. Now, on this clause 8, I will stop this share and show you one of the very interesting presentation of mine. Yeah, are you able to see this, sir?
Yes, sir.
Yeah. Now, my question is, in the case of a private limited company whose turnover is 3 crores, they don't come under that, and they let us say 5%, they don't comply. They have paid 10% in cash and 15% they have received in cash. Okay. In that context, the audit which you do under section 44AB, does it come under clause A, B, C, D, or E? Where does it come?
(44E).
44AB, we talked about clause A, business of more than 1 crore, B for professions more than 50 lakhs, C for AE, D for ADA, E for AD, 44AD. So in the case of a company whose turnover is 3 crores, where will it be reported under? 44AB clause. If we think that it is clause A, it is wrong. That's what I am trying to say. I mean, I wanted to show this particular slide. I think that question of Mr. Anand is emanating from this particular drop-down menu. The drop-down menu for this particular situation talks about like this. It says, please understand, I have to say, wherever I am using form 3CA, please understand, wherever I am using form 3CA, I am doing the tax audit not under 44AB clause A, B, C, D, E. I am doing it under the third proviso to 44AB. So what is this third proviso to 44AB? In a case where such person is required by or under any other law to get his accounts audited, it shall be sufficient compliance with the provisions of this section if such person gets the accounts of such business or profession audited under such other law before the specified date and furnishes by that date the report of the audit as required under such other law. That is an audit report under 700, 705, 706, and a further report in 3CA by an accountant in the form prescribed under this section. So in the wherever I am doing the audit of an entity which is otherwise subject to audit, it could be even an LLP. If I am already auditing the LLP under the LLP Act, when the turnover is more than 40 lakhs or my capital contribution is more than 25 lakhs, or the partners have voluntarily opted to get their books of accounts audited, then I will say it should be audited. And I give an audit report. Wherever I am giving, I am not doing my audit under 44AB, A, B, C, D, E. I am doing it under the third proviso to 44AB. So if you come to the drop down here, A, B, C, D, E, proviso to clause A, business turnover up to 10 crores, third proviso audited under other law. So I have to click for this company, third proviso audited under any other law. In fact, the institute has got 2 review boards. One is called the Financial Reporting Review Board, which I am a part of. If you have keenly listened to my biodata, I mean, I have been associated with the Institute for reviewing the financial statements for non-compliance of any accounting standards, standards on auditing, company law, Schedule 3, etc. And that is what we pick it up. Now, from the last 3 years, there is something called the Taxation Quality Audit Report Board. So what this Taxation Quality Audit Report Review Board does is they pick up the mistakes that are found out in the tax audit reports or any audit report for that matter, including tax audit report. One of the mistakes that I found out is most of the chartered accountants, in the case of a company, wherever 3CA is used, in short, wherever 3CA is used, you should use third provisor, not 44AB clause A. So that is the background to this particular thing. Now, the question that Mr. Anand has asked is, when do I click proviso to clause A, business turnover up to 10 crores? Now, what is this proviso to clause A, business turnover? Let me take you through this presentation. Yeah. You know, what is this proviso? It says, this proviso says, carrying on business. One second. Yes. Carrying on business. We talked about 44A, B, C, D, E. Carrying on business shall, if his total sales or turnover as a gross receipt, as in the case may be, in business is more than 1 crore in any previous year. Okay. So that is the question. And then the proviso says, the proviso, please understand this. If you have the act, you will see this proviso to clause A. This particular exception of 10 crores, less than 5% is coming under proviso to clause A. Is coming under proviso to clause A. Now, my point is, what does the proviso say? You don't have to get your books of accounts audited as long as your turnover is less than 10 crores and this 5% rule is complied with. Now, if that is complied with, then the proviso kicks in. I don't have to do the audit at all. Please look at this. I don't have to audit at all. So when do I actually tick? If I don't do the audit at all, I don't have to do 3CA, 3CB, 3CD. So where is the question of ticking this proviso to clause A, business turnover up to 10 crores? I fail to understand. I don't know. I don't have an answer to this. You don't have to do the audit. If you don't have to do the audit, no audit report. If the no audit report, where is the question of clicking this particular box? Only one thing which I can think of. Now I will connect it to a very interesting point. Now, there is a business entity. I mean, I have a company. The turnover is 9 crores. Their turnover is 9 crores. And all their receipts are in permitted modes. Only 2% of their expenditure is in cash. 2% of their expenditure is in cash. Now, in such an entity, can I claim 80JJAA? Look at this. Can I claim 80JJAA? Now, let us say my example of 1 crore last year. This year, they added 60 lakhs new. 60 lakhs into 30% comes to 18 lakhs. Can they claim the benefit of this 18 lakhs this year and the next 2 years? Kumar Guru sir, what do you say?
AA says that ASI should be subject to tax audit.
No, sir.
For whom 4480 applies.
No, look at this. Now, you tried to help him by telling don't go to a chartered accountant and pay his audit fee. And now denying him this 18 lakhs ka benefit. 18 lakhs into 25% or whatever it comes to next 3 years, you know, you are denying him. You see that? Yes, can such an assessee, now I am asking you, can such an assessee say that I don't want to claim this particular benefit of no tax audit? I don't mind paying 50,000 rupees to a chartered accountant and getting the benefit of 4.5 lakhs of tax savings, you know, whatever that is. Then can I click proviso to clause A, business turnover up to 10 crores? Then also it is wrong, because if you are ticking that proviso, then you are saying that I am not. So whoever is ticking this, then I will say for such an entity, how will the department know that you are eligible to no tax audit? Aap tax audit kar do. Only if you say that, you know, I am coming under that, I don't have to say anywhere. So that is a question which Mr. Anand has asked. A very good question that is.
Beautiful answer, sir. I think most of us would have lost sight of this distinction, sir.
Yes. No, we broke our head the moment my office came with this, because in my office, I don't fill any of the tax audit report. Let me be very honest. I mean, I only play a directorial role. I don't sign any tax audit reports, but all the provisions have to go through me. All the tax audit reports will have to mean any interesting issues has to come to me. And we have 5 partners, all of them do the tax audit. When they placed it before me, I had to break my head to understand what the hell is this? Where do I tick? I don't have an answer for this. Okay. Stick it. So we'll go back to Anand's questions. Yeah. Is this visible, Anand's questions?
Am I audible?
Not it, sir. I think you are.
Yes. No. Mr. Anand, Mr. Anand?
Yes, sir. Am I audible?
Yes, please. Please go ahead.
Sir, my opinion is
Yeah.
44 ABA applies to entities where the turnover exceeds 10 crores. And between 1 crore and 10 crore, that proviso, that drop down for proviso to 44 ABA should be chosen. That's from that point of view only I asked that question, sir.
Sir, very good point, thinking point. Let me say, why do you say that 44AB proviso to clause A applies? That for the purpose of this clause, the payment receipt, what does the proviso say? Provided that in the case of a person whose aggregate turnover less than, this clause shall have the effect for the words 1 crore. I still don't agree with your view, sir.
Yes, sir.
I would still say this proviso does not apply to me, and therefore, for anything more than 1 crore, I come under AB itself.
So between 1 crore and 10 crore also, you mean to say 44 ABA should be chosen?
This is my view.
Yes, sir.
Maybe if you have chosen that between 1 crore to 10 crores,
Yes,
then I would say that
since
the
that
proviso
5% has not been complied, so that's why
Yeah.
we are to choose. The department should know they want further bifurcation between that 1 crore and 10 crore. So in my opinion, that's why they have introduced that additional point. So we have to choose that drop down, sir. In my view, that's why I asked this query.
How I would counter your view is, just because they have done a mistake, we are trying to give you another mistake. Because they have given that. If they had not given, what you would have done? You would have gone under A.
Yes, sir. Yes, sir.
You would have gone under A.
That's
Now
why-
they have given something to crunch on. You are trying to crunch on. That's what I would say. But I still don't agree with your view. Well, you can have your view. I mean, we can agree to disagree. But the point is, I would still take. I would say proviso does not apply to me, because proviso kicks in only if my both the conditions of 5% on both sides are complied. Since it is not complied, proviso does not apply to me. I go back to A itself.
Sir, since it's a schema based one, so there is no character to explain all those things. That's why they have made it in mentioned only proviso. Since it's a software based, they could not have.
No, I would still, since you are telling this, I would talk like a computer. I will talk like a computer. I am telling to the computer that am I covered under proviso to clause A. That means I am giving you, my turnover is 9 crores. My receipt is 13% in cash. My payment is 15% in cash.
Okay.
Is the proviso applicable to me? I am now saying, computer जी, आप बताइए कि ये provision मेरे को apply होता है कि नहीं है? Computer will say वो apply नहीं होता है. I mean, it is only binary 0, 1. That's it. Yes or no. So computer बोलता है कि आपको 0 apply नहीं होता है. So जब apply नहीं होता है, तो where is the question of taking that provision? That's what I am saying.
There is also
Okay,
one
sir, but you
more, misconception that seems to be there, sir. When we go under that proviso, that 8% criteria and other things does not apply. It can be any number, correct, sir?
It can be minus 8%. I mean, let me tell you, if your turnover is 9 crores, very interestingly, I will give you a situation. If a person has opted for 44 AD, if a person has opted for 44 AD and his turnover is, let us say, 1 crore and 80 lakhs. 1 crore and 80 lakhs. And he shows a loss of 3 lakh rupees. Will you audit him, sir? No, you will have to audit him. I mean, you will have to audit him because 1 crore and 80 lakhs, he had opted for 44 AD earlier. So you have, and he's showing a loss of 3% because minimum he has to show a profit of 8%. If he's showing a loss of 3%, you have to audit him. Now my question is, in next year, his turnover is more than, let us say 2.5 crores. His turnover is 2.5 crores and he complies with the 5% rule. He is within 5%. He is within 5% and he is showing a loss of 10%. Will you audit him? The answer is no. So very interestingly, if the turnover is more than 2 crores and he complies with the 5% rule, even if he shows less than 8%, 6%, 50%, whatever it is, of course, 50% does not come because 50% is applicable only to professionals. You don't have to audit. Yeah. We move forward. Total sales bar turnover exceeding specified limits. If the turnover exceeds 10 crores, please confirm for choosing this drop down. I think we talked about this. We talked about this. Now, since we are on this very interesting point, if you looked very closely, I mean, I would like you to open up your tax audit, 44AB. It says every person carrying on the business, if his total sales, turnover or gross receipts exceeds the limit. Now, I will give you a very interesting situation. I will give you an interesting situation. The business turnover in the case of a company, is 90 lakh rupees. Is 90 lakh rupees. It has received advance from customers 25 lakh rupees. 25 lakh rupees. He does not comply with the 5% rule. Let us not get into that 5% rule proviso. Now, his total receipts during the year is 90 plus 25, which is 1 crore 15 lakhs. Will you subject him to tax audit? Yes or no? Your turnover is 90 lakhs. Gross receipt is, if you go through the gross receipt route, it is. I will give you one example. And in the next year, let me complicate the situation from CA Inter to CA Final. Okay. The next year, what I will do is, next year his turnover is 95 lakh rupees. His next year turnover is, let us say 1 crore and 5 lakh rupees. His next year his turnover is 1 crore and 5 lakh rupees, including the 25 lakhs which got squared off during the year. You look at that. Now, whether you will subject him to tax audit in year 2.
First year it will be applicable, second year may not be.
First year it is applicable, second year it is not. Is what is Meenakshi Sundars. My view is first year it is not applicable.
It is using the word turnover, so second year also should be applicable.
No, my view is, I will say first year it is not applicable, second year it is applicable. There could be a third view which says that first year also it is applicable, second year also it is applicable. Now, this is what happens if you are a borderline case. If you are a borderline case, this is what happens. But the very interesting point is, let me now talk about in the first year. In the first year, my turnover is 90 lakhs. My gross receipt, should I consider yes or no? Should I consider yes or no? Let us be on the serious note of 25 lakhs advance received. Should I consider that? Kumar Guru sir, are you considering this? 100% no chart account will consider. Theoretically now I have ignited you, you are probably thinking, but then nobody looks into the gross receipt. We look into the P&L account credit and we talk about this situation. Lucknow Tribunal recently has held against my view, against all the chartered accountants' view, that even advance must be considered for the purpose of 44AB limits. Otherwise, 271D penalty will be applicable. That he has not given the audit report. I will certainly take this particular case to its logical end. If it comes to me, it's not my case, so I'm not worried. But if it comes to me, I will argue against this particular Lucknow tribunal with all due respect to the tribunal members. I would say the word receipt that is used here, should not be converting my accrual system into cash system. If I am following a particular system, I should go with that particular system. It cannot convert my accrual into cash system. That is my first argument. My second argument is, I have to, what is the word gross receipt? What is the meaning of the word gross receipts here? The meaning of the gross receipts, sir, not everything becomes turnover. Yes. Not everything becomes turnover. For example, sales is my turnover. If there is an interest income, look at this. If there is an interest income, I have a fixed deposit and I have received interest. Whether that interest is a turnover, sir? Kumar Guru, sir, whether interest is a turnover,
It's not a
whether
turnover.
rental is,
It's
it
not
is
a
other
turnover.
income.
Yes.
It is not turnover. I mean, whether the rental income is a turnover. Normally, I take all those dividends, for example, dividends. Now, all these are to be considered for the purpose of gross receipts when I'm calculating, and not only the turnover. That is what is meant by that. If, for example, every receipt has to be considered, then if look at this, 10 lakhs is my turnover, and I have taken a loan of 2 crore rupees. I have taken a loan of 2 crore rupees in the case of a private limited company I'm talking. Then this should also be subject to tax audit. No? 10 lakh rupees is my turnover, 2 crores loan I have taken. Now you may ask which was the bank which gave 2 crores for 10 lakhs turnover. I will say they have taken a term loan because showing the projections in future they will do all that. But the point I'm trying to say is every receipt, unless it gets the nature of a turnover, cannot be considered as receipt in that sense. Although the tribunal has told, I'm just bringing that particular point to your knowledge. Okay, let's move forward. Anand sir's next question is particulars of each repayment of loan. A very, very good question. But then let me try to make out the sense. Particulars of each repayment of loan or deposit or any specified advance in an amount exceeding the limit specified in section 269D made during the previous year. And the next point is 31D. Particulars of payment of loan or deposit or any specified advance in an amount exceeding the limit specified in 269T, received otherwise than by a check or bank draft or use of electronic clearing system through a bank account during the previous year. The question that Anand sir has raised is not able to distinguish between clause 31C and 31D. When all the details are already reported in clause 31C, does it mean repetition in reporting under clause 31D? That is the question. Let me prove that it is not a repetition. I think that's the point that we have to say. Now here, particulars of each repayment, here also particulars of each repayment, or of loan or deposit, here also loan or deposit, or any specified advance or any specified advance, in an amount exceeding the limit specified in 269T. Okay. Here in section 2, received. I think this is very important, sir. The point is 31C. If you go back to 31C, in 31C, what he uses the word is
amount exceeding the specified limits.
I wish 1 second, sir. I am not able. Yeah. You are able to see. The word here is. Are you able to see the changes that I'm making?
No, sir. We are still in your folder, sir. You'll have to switch to.
Okay. Stop share and scale.
Yeah, now it is visible. Yes, sir.
You should have told me in the beginning. Okay. Okay. I mean, I was reading already from the thing. I wouldn't know because for me, to my screen, now it's clear, right?
Yes, sir.
So what Mr. Anand has raised is, what is the distinction between 31C and 31D? Okay. The distinction between 31C, I was reading 31C and 31D word by word. Particulars of each repayment of loan or deposit, same thing, is used in both the places, or any specified advance in an amount exceeding the limit, in section 269T, here, sir, made during the previous year, here it is received otherwise. So one is a case of made. The other one is a question of received. That is the distinction, sir. So this is from the payer's perspective. This is from the receiver's perspective. So which means if I am, let us say, I am into a jewelry business. Did I make any payment of more than, in this point, 269T he is talking about, repayment of loan. What is the repayment of loan, sir? 20,000 rupees is the cutoff. 20,000 rupees is the cutoff. So did I make any payment of more than 20,000 rupees? So here, let me, before I get into the example for jeweler, I will probably take the help of the other example. Let me take. Anand sir, since you asked this question, I will take your example. I have given you a loan of 40,000 rupees in cash. I have given a loan of 40,000 rupees to you in cash. So who is defaulting, sir? And under which section?
This,
I have received the loan, so I am a defaulter. You
Yes,
have given
you are
me.
a defaulter. Yes. Am I a defaulter, sir? Am I a defaulter?
No.
No, I am not a defaulter. Very correct. Now, sir, afterwards, after 2 months, you are going to return this 40,000 rupees back to me. Who is a defaulter, sir? You are returning the 40,000 rupees to me. Who is a defaulter, sir?
Both.
Done by account pay, check or draft.
Correct. So who is a defaulter?
Myself.
Yes. The point I am saying is, once when you received the loan under 269 SS, you are a defaulter. And when you return this money of 40,000 rupees after 4 months in cash, again you are a defaulter. I am not a defaulter. Now, are you maintaining books of accounts? Maybe yes. But will you show this in your books of accounts? Maybe no. I'm just telling maybe no, because you are received in cash and repaid in cash. Only that which comes in check and goes out of check will be recorded in the books of accounts. You may not record this. Well, if I were to be a very professional, I will maintain my books of accounts. Like if I were to be a finance professional, I will maintain my books of accounts. Because, I will tell you like this, a person who receives loan need not maintain books of accounts. A person who has given loan has to maintain books of accounts because he has to know from who he has to collect back. And from whom he has to collect back, he has to maintain books of accounts. I'm just putting it in a lighter vein. Having said that, if I maintain my books of accounts, I will say, under clause 31D, that I have received from Mr. Anand 40,000 rupees in cash, which is in violation of 216D. I will report it royally because there is no penalty on me. In clause 31D, sir, in clause 31D, if you see, I have to give particulars, name and address and PAN number of the payer. So I will give Mr. Anand, situated in Pondicherry, PAN number of Mr. Anand I will give. Amount of loan or deposit received otherwise, 40,000 rupees. So by giving this, your books of accounts, your auditor has not shown, because it is not shown in the books of accounts. My auditor will show. And based on my reporting, a penalty notice may be coming to you. That is the purpose of 31D. Because 31C, all of us are very clear. It is very apparent. Class 31C has been there since ages. 31D got introduced, I think, 4 or 5 years ago, when they wanted the other person to report on the, non-compliance. Are we clear, Anand sir?
Yes, sir.
Yeah. Now, I talked about the example of 40,000 rupees I paid and 40,000 rupees I received. I will extend this to, I had given to Mr. Anand 3 lakh rupees in check. 3 lakh rupees in cash. Instead of 40,000 rupees, I gave 3 lakh rupees in cash. So Mr. Anand is defaulting under 269 SS. Will he also be defaulting under 269 ST?
Yes,
Will he also be defaulting under 269 ST?
more than 2 lakhs.
Because he is taking more than 2 lakh rupees in cash. Will he also be defaulting under 269 ST?
Yes.
So will he be doing a double default? Therefore, will he be liable to double penalty?
No.
216 is not applicable for SS and T.
Sir? 2 269 ST excludes those transactions which are otherwise covered under 269 SS and 269 T. So that is the point I wanted to say. Now, so that is one point. The second point is, after 4 months, now in the earlier example, 40,000 I had given, 40,000 I took back, there was no problem. But in this example, it is now moved up to 3 lakh rupees. In 3 lakh rupees, if he is returning me, in the original example, he had committed a mistake of 269T. Now, since the amount is more than 2 lakh rupees, I will now be subject to 269 ST. 269 ST. Can I say that this is a loan transaction which is covered under 269T, therefore 269 ST will not apply to me?
Class 31.
I'm just trying to bring out the advocate's view, but then it's difficult. It's difficult because it is not covered under 269T. 269T does not capture me, the giver, who is receiving back. Therefore, 269 ST may come into picture. So that's a point I wanted to bring out. Next, sir, 31E. Is the chairman there?
Yes, sir. Yes, sir.
Sir, you wanted to have a break for 5 minutes. If you want to have a break, I will give. Otherwise, I don't need break. If you want, I mean, he mentioned very clearly that there may be some senior members who may like to have a break.
Yeah.
I don't mind giving a break of.
Yes, sir.
We will continue Kumar Guru, sir.
But
Kumar
for
Guru, sir.
5-10 minutes, we will have a general discussion, sir.
Sir?
For 5-10 minutes, we will have a general discussion so that members can refresh them and come back, sir.
I tell you, Chairman,
Yes,
once I had been to Jhansi. No, I mean, I had been to a place called, it was a residential seminar.
Yeah.
In a beautiful place very close to Jhansi. Okay, there were a lot of senior members. After 3 years, I met them again. They said, "आपका lecture इतना बढ़िया था कि हमको टॉयलेट भी नहीं जाना हुआ, मगर बहुत जोर से आ रहा था." Then I realized that I was not doing a good job. So I think we should give it, because if we are talking also, people not be able to go out. So we will give a 5 minutes of, I would call it as mobile break or a biological break before we go further. And then we will resume. Now it is 5:49. Kumar Guru, sir, you tell me what time we should join. 6 o'clock?
6 o'clock, sir. 6 o'clock.
Okay. Yeah. 6 o'clock, we will join back. Chairman, is that okay?
Yes, sir. Yes, sir. Yes, sir. Thank you, sir. Yeah.
Whoever is interested can continue. Otherwise, people are anyway doing a lot of works, switching off their videos. They can continue to be there with whatever they are. Thank you so much. I will be also switching off my mobile, my video. We will reassemble after at 6 o'clock, please.
Thank you, sir.
Whoever gets reported, please.
This meeting is being recorded.
Yeah. So whatever is now told under 31E is only will be subject to penalty provisions. 31C is going to say what are all the various loans that I have made, and 31E is going to say what are all the violations in 269T. So that is the difference between 31C and 31D. Mr. Anand, are you clear, please? I'm not able to see you. Yeah, Mr. Anand, yeah.
Yes, sir.
Clear, right?
Yes, sir. Clear, sir.
Yeah. So the next point. Now let us for a moment try to understand, since we are on a different subject. One of the situations happened like this. 1 lakh rupees was the cash taken, and it came for scrutiny. At that stage, you know what the businessman did. He knows that 1 lakh, if I take it in cash, I will be subject to penal provisions. So he passed an entry of 20,000 rupees into 5. Instead of saying I have taken 1 lakh from Mr. Kumar Guru, he said 20,000 rupees from A, 20,000 from B, 20,000 from C, 20,000 from D, 20,000 from E. Can he escape the penal provisions?
20,000 and above.
Yes, sir. 20,000 and above, somebody said. I think,
20,000 and above.
yes. The point is, even by doing that, he gets caught. So if at all he had to do, he had to make it 19,999. So we need to understand what is the exact cutoff. What is the exact cutoff in that particular sense. So when it comes to 40A3, what is the cutoff? I can make a payment up to 10,000 rupees. That means 10,000 rupees is also included. That is the difference between 10,000 rupees and 20,000 rupees. When it comes to 2 lakh rupees, it is 2 lakh and above. 2 lakh and above. So 2 lakh is also included. So that is how I have to see the cutoffs. And one very interesting thing in this particular concept, since Mr. Anand raised this, particulars of each repayment of loan or deposit or any specified advance. What is the meaning of specified advance? In fact, if you go through, I don't know which clause is that. This is 31C, right? So there is one clause before that. SS, 269 SS. Yeah, 269 SS. If you go 31A, he uses the word particulars of each loan or deposit in an amount exceeding the limit specified in section 269 SS. Then in clause B, particulars of each specified sum. What do you mean by specified sum? Here he is using the word specified advance. There in 269 SS, he is using the word specified sum. So what is meant by specified sum? And what is meant by specified advance? Let us contemplate on that. Now, 269 SS does not say, I have taken a loan of more than 20,000 rupees. I have taken a deposit of more than 20,000 rupees, or I have taken a specified sum. What is a specified sum? Specified sum means advance or otherwise in relation to an immovable property. Advance or otherwise in relation to an immovable property. Now, what does this mean? Advance for immovable property. Please understand, if I have sold a property, immovable property of more than 20,000 rupees, I cannot take it in cash. What is meant by or otherwise? Kumar Guru sir, what is meant by or otherwise? Sundar, what is your view? What is meant by otherwise? Please unmute, unmute. You are muted.
Outright sales.
In my view, sale will also be covered, sir.
Absolutely. The point is, if somebody said only advance was covered, what he will do is he will buy a property by giving 20 crores in cash. 20 crores he gives in cash and says only advance is covered. So I can give you 20 crores in cash and you register the property to me. So or otherwise means in any mode, if you are paying advance or it is for, instead of saying otherwise means they should have said advance or for the purpose of sale itself. So instead of saying sale, transfer, so many other things, they said in any other context, if it is towards an immovable property, anything more than 20,000 rupees has to be paid in cash. Now, therefore, 269 SS, has to be paid in permitted modes. The point is, when it comes to 269 SS, when it is coming to 269 SS, they use the word specified sums. When it comes to 269T, they did not use the word specified sum. They use the word specified advance. What is the reason? The reason is very simple. Once the property is registered, it cannot be returned back. Only advance is given, advance can come back. Or otherwise means once it is registered, it cannot come back. So 269T cannot happen for an immovable property once the property is registered. So therefore, advance given can be cancelled and advance can be returned. So there in 269 SS specified sums, advance or otherwise. When it comes to 269T, specified sum means an advance which was paid, which is received back for the immovable property, which has not happened, should also come back to me in account pay check, account or the permitted modes.
Sir, I have a query on immovable property transaction, sir.
Yes, sir.
I have a doubt on immovable property transaction.
Please tell me, sir. Please tell me the doubt.
Sir, only the recipient seller is penalized, the buyer can purchase the amount in by way of cash. There is no violation in any section, sir. There is no penal provisions. As you said, only the recipient is subject to penal provisions.
But if the
Buyer
buyer happens to be a businessman, then under 40A3 he will get caught. I mean, I'm just putting it that context. You are right.
Yes, sir.
Because the buyer, if he happens to be other than a businessman, then there is no problem.
Yes. Under section 269 SS, only the seller has been penalized for immovable property transactions. Am I right, sir?
Yes,
You are
sir.
right. You are right.
Yes.
You are right. But I'm telling that if the buyer happens to be a businessman, he happens to be a businessman and he is paying more than 10,000 rupees in cash, under 40A3 there will be a disallowance.
Yes,
That's
sir.
the point to be known.
Businessman means dealing in properties, dealing in real estate.
Absolutely, you're right. You're right. Yeah, not every businessman. A businessman whose business is in the
If it
context
is
of
a
buying and
stock in
selling.
trade, if that
Yes,
property is a stock in trade.
Exactly.
Also the business assets, sir.
Sir?
Personal assets not.
And
So business
if
asset
the immobile,
depreciation
if
you
the
cannot
immobile
claim.
property constitutes business asset, if
Only
the
business
buying
asset.
and selling of the proper immobile property is a business, then in that context, 40A3 will come into picture. Yeah, you are right.
But if
So
the
let's move
purchase, if the purchase amount exceeds 2 lakhs, then 269T violation will come. In the case of purchase of immovable property.
No, sir, 269T is only
269 ST, sir. 269 ST.
ST.
269 ST, definitely. You are right. Absolutely, you are right. If it gets returned,
Yes.
that's true. Yeah, we proceed further. Clause 31E we saw. Clause 35A. In case of a trading concern, give quantitative details of principal items of goods traded. That is a question in the tax audit report. Anand's question is, if quantitative records are not maintained, can we leave this clause blank? Should it require qualification in main audit report, para 3 or para 5 of form 3CB, as the details are not available for reporting? I don't know about the drop down in case the quantitative trading concern give quantitative details of principal items. I don't know whether it is a drop down. Anand, you can correct me if it is a drop down. Then you don't have an option but to leave it blank.
Yes, sir.
By, as you rightly said, qualifying it in para 3 or para 5 of 3CB or 3CA or 3CB respectively. Please understand, I mean, if you have written para 3 or para 5 of form 3CB means in form 3CB, you have to bring it only under para 5. If it were to be 3CA, it would be para 3. So that is how we have to take it. In para 3 of 3CB, you bring out only non-compliances in the financial statements. It could be certain provisions have not been made. Gratuity provision has not happened. Things like that, what you normally give in the audit report qualification, that is what gets covered under clause 3 of 3CB.
So my query is whether this non-maintenance of stock records is required to be reported in para 3 or para 5.
Para 3 of 3CA.
I agree. Para 3, will your financial statements not be true and fair if you don't maintain quantitative details of the principal items of goods traded? Yes or no? Can I not have a year-end stock taking and have a proper valuation and have the financial statements true and fair? If the answer to that is yes, then para 3 is not required. And in my opinion, the answer to para 3 is, the answer to this question is yes. So therefore, para 3 need not be what should I say? In that sense, invoked.
Okay, sir. Okay, agreed.
Yeah. Clause 13F, disclosure as per ICDS. Question is disclosure required only if adjustments in 13E is required? Otherwise, can it be left blank? What is your answer, Mr. Sundar?
Yeah, only if the answer to the D is affirmative, then give details of adjustment, sir. It is not affirmative.
What is 13E?
If
If the answer to D, above is in the give details of such adjustments. Let us be clear. 13E says only if the adjustments are required, then you have to give the details of such adjustments. The question is not in relation to 13E. It is in relation to F.
13F.
Disclosure as per ICDS. Disclosure as per ICDS is irrespective of the adjustments required. So let us be very clear. Income computation and disclosure standard. I don't know whether in Pondicherry I have ever spoken on ICDS. Income computation and disclosure standards. Please understand, these are bifurcatable. Income computation is an Excel subject. Disclosure is a Word subject. I mean, to understand it easily. So whatever computation is required to be made is done as per income computation, and disclosure is a Word aspect which has to be there whether or not there are any computational adjustments. For example, you have been asked to report on, you have been asked, first of all, I think ICDS 1 talks about accounting policy. Every company or every entity which is subject to, of course, accrual system and having business income, because ICDS does not apply to those who are following cash system of accounting. If you are following accrual system of accounting, you need to have books of accounts, and there must be a policy for maintaining the books of accounts, which is normally there for, what should I say, in the accounting policy itself. So you can refer to that accounting policy. Then ICDS 2 on inventories. ICDS 2 on inventories. What is the accounting policy followed for inventory? You may have followed exactly 145.2 or whatever that is required. I mean, 145A you have properly complied with. You have an accounting policy for inventory, lower of cost and net realizable value. And if you have followed standard costing, you have to put that standard costing and why you have followed that and things like that. And not only that, in ICDS 2, you are required to give the breakup of the inventory as raw material, work in progress, stock in trade. If it is already given in the financial statements, you can refer to that. Then ICDS 3, revenue recognition. What is the principle that you have followed for revenue recognition has to be told. You may not be non-compliant, but disclosures have to be made. Construction contract may not be applicable to you. Like that, for every standard, you will have to see whether it is applicable. To the extent of disclosure required, you'll have to make a disclosure. Now, this is a tax audit. Of course, ICDS is also brought in, TDS is also brought in. Tax audit becomes entire income tax. So I would request the branch to have a separate session on ICDS on a separate date. So the answer, the simple answer to this question is disclosures will be required whether or not there are any additions proposed under ICDS income computation. Okay. Class, Anandji, are you clear?
Yes, sir. Suppose if there are some some ICDS classes like foreign exchange and this construction contract, if it is not applicable, then also it should be mentioned that it is not applicable to the assessee, or it need not be.
But to that extent, you may not give anything. Either you can choose to give not applicable, or you may not give anything. That means it is presumed. I always say it is better to reproduce and say not applicable than to leave it like that. Because if 1 year, if it is left, the next year when the actual transaction is there, you may actually fail to give it by mistake. So I would always say, please give. That would be the best way to answer that.
Yes, sir.
Yeah. Clause number 27A. And here only one point I wanted to say is our entire income tax talks about inclusive method of accounting. Whereas our accounting standards talk about exclusive method of accounting. Let me tell what is the difference between the two, and for ICDS also this is very important. Now, when you are following for accounting standards, our accounting standard 2 says inventories must be valued at cost, and cost includes all the cost of purchase and all costs incurred to bring it to its present location, including taxes which are otherwise subsequently recoverable. So I don't include GST in my inventory if I am claiming that GST as an input in my books of accounts. Whereas 145A and ICDS 2 talks about inventories must be cost of purchase and taxes should be, they don't say other than those which can be subsequently recoverable. They don't use that word. That means income tax for purchases, for sales, for inventories, and 145A very clearly says that it should be inclusive of the taxes. Now, does this exclusive method or inclusive method make a difference to inventory valuation? That is my first question. Does it make a difference to inventory valuation? Kumar Guru sir, what is your view?
Only in the first year only it will affect, sir. Subsequent years there is no.
No, I would say, does it make a difference? Will the inventories be different? The value of inventories be different if you are following inclusive method and exclusive method?
No.
No, sir.
No, sir.
Answer is yes. The value of inventory will be different if you are following inclusive method and exclusive method. But the profits will not be different
Yes.
if you are following exclusive method or inclusive method. So let me explain this with an example. See, if I am following let us say I am dealing in pens and I bought one pen for 100 rupees. With the GST, it is 118 rupees. So how do I account for my purchases in my books of accounts? In my books of accounts, my purchases, although I have paid 118 rupees, I will take 100 rupees to my purchases, 18 rupees to my GST account, input tax claimable, whatever. And since I purchased it at 100 and in the year end, if it is there, I will keep the closing stock of one pen at 100 rupees. If I am following the inclusive approach, what I will do is I will debit my purchases with 118 and my closing stock inventory will also be 118. So for my first question, will the value of inventory be different if you are following exclusive method and inclusive method? In exclusive method, inventory is 100. In inclusive method, inventory value is 118. So therefore, there is a difference. But will the profits be different if I'm following the exclusive method or inclusive method? The profit will not be different because in the first year or in the 100th year, it will not make a difference because whatever value of inventory has gone up by following the inclusive method will be offset by a corresponding increase in the purchase price or in the opening stock, and therefore there will be no change between the profits of the inclusive method and the exclusive method. Am I clear, sir? Then why the hell, let us now understand why the hell is that income tax department is so hell-bent on following inclusive method when our institute and a lot of suggestions have been given to the income tax department that please convert your ICDS into equivalent of AS2. There is a reason. I will tell you from the income tax department's point of view, there is a reason. I will tell you what the reason is. Assume that this 18 rupees you have now paid and you have purchased it. You have paid 18 rupees and you have purchased it. No, sir. You have sold this particular item. You have sold this particular pen for 200 rupees. You sold this pen for 200 rupees. So 200 ka upar GST 18% comes to 36 rupees. Now 36 rupees in my accounting, what I am doing, I am showing 100 rupees as my purchase, 200 rupees as my sale, 100 rupees as my profit. Forget it. Finish. Now, in my GST account, I am showing 18 rupees debit, 36 rupees credit. 36 rupees credit. And 18 rupees is payable until it is paid. Now the question is, this I have not paid. This 18 rupees I have not paid. What is the implication on income tax? Under 43B, this particular 18 rupees will not be allowed till such time I have actually paid it. It will be allowed only on payment basis. Now an intelligent person will come and say, how can you disallow this 18 rupees when I have not claimed it as an expenditure in my books of accounts? I have not claimed this 18 rupees. I have not debited this 18 rupees in my books of accounts. How can you, disallow that? That is why Income Tax Department says, follow the inclusive approach. If you follow the inclusive approach, 118 rupees and 236 rupees. So 236 rupees minus 118 rupees, 118 rupees is your profit. If that 18 rupees is now debited to your profit and loss account, 18 rupees you will debit. To GST, whatever 18 rupees I will debit. I have to pay this 18 rupees. I have claimed it as an expenditure. And this 18 rupees will be allowed if and only if it is paid within the due date under 139(1). So that is why they are saying you have to follow the inclusive method. Very interestingly, since Mr. Anand asked this question, let me tell you, under ICDS 2, if we are following the exclusive method, we have to elaborate it with the note. We have to say that inventories have been valued, excluding the taxes which are subsequently recoverable. And this particular valuation will not impact, is tax neutral, is revenue neutral and tax neutral. It has been so held in the case of Berger Paints, Supreme Court citation. It's a Supreme Court decision, Berger Paints, so which we are giving in all the tax audit reports. So that is the importance of exclusive method and inclusive method. Clear, sir? Amount, I think 27A, whether GST ITC details are to be filled up as required in the schema. The question is, in clause 27A, amount of central value added tax. Sir, this words bar input tax credit, is it there in the schema, sir? Is it there in the rules? Anand sir, is it there in the rules?
It is there in the schema, but it is not in the notified form, Gazette notified form, sir.
Fantastic, fantastic, sir. I will go with the notified form. In the notified form, it is not there. Okay. Amount of central value added tax. In our office, we have taken a decision that this is not applicable. Even if I don't have to break my head, because central value added tax is there. They could have, let me tell you, they changed the 3CD form as recently as April 1st, 2021. Could they not have changed this at that point in time? That means the department, Income Tax Department, does not want any inputs from me on GST matter, for the simple reason that GST Department and Income Tax Department are talking to each other. So therefore, I don't have to give them any inputs on GST from my side, because I would have given it to the GST and GST would automatically enable the flow to the Income Tax Department. So we are saying clause 27A does not apply to me. I'm saying not applicable. Although I don't have to fill up all these things. I mean, I will not say fill up any one of this.
Sir,
Department
will have the total amount of inputs and total amount of utilization. But in books, it might be different, no, sir? The inputs availed might be lesser or more.
So once, no, I fully agree. I don't know who. Please tell me your name, sir. I don't know.
Sir, I am Prabhakar, sir. Chairman.
Oh, chairman. Okay, sorry. I couldn't see that. Okay, Prabhakaran, sir. Yeah, all that the department wants, they should ask. They cannot ask me through SENVAT. You give me SENVAT details and ask me to give GST. Why should I give GST details when they are asking for SENVAT? Again, I am saying they cannot plant extra any word. With tomorrow, if they say you have not given a GST, I'll say you did not ask GST. In GST, there is no concept of SENVAT. Please ask whatever you want, I will give. Okay. Yeah. So that gets us to the end of Anand sir's very good questions. So now I will, for a moment, go back to my presentation and talk about what are all the changes that have happened during the year. What are all the changes in the tax audit report that has happened during the year. Any questions so far, anybody, please? If there are any questions, because now we have got only another 40 minutes, because I give 10 minutes extra break. I will go for another up to 7:10. I will go. After that, I'm not available. So let us be very clear. So if you have any questions, I will answer those questions. But for 10 or 15 minutes, I would like to explain the change in the Form 3CD report for financial year 2021. apart from 1920, from assessment year 2021, whatever we were doing continues. 21-22, there are certain changes which I'm going to talk about. But one of the important points to be noted is, let me make it a full screen. Yeah. One of the important points to be noted is clause 3CD, 3CA, 3CB, no change. There is no change. In 3CD, there are 44 clauses, 44 by number. There are much more than 44. Interestingly, I have a list of sections that are referred. The list of sections that are referred, I mean, I asked this to my students here. How many sections are referred in 3CD? How many sections are referred in 3CD? There are 90 sections, 90 sections, plus 5 chapters. And out of the 90 sections, 89 sections are from Income Tax Act. One section is from MSMED Act. One of the clauses asks section 23 of the MSMED Act. You know, section 23 of MSMED Act. That is, I think, tax audit report clause number 21.I. What is this 23 clause 20 section 23 of MSMED? Sorry, tax clause number 22. Clause number 22 of the tax audit report refers to clause 20, section 23 of MSMED Act. Section 23 of the MSMED Act says, which is important for all of us chartered accountants to know, that whenever there are dues to an MSME, in fact, it is micro and small enterprise, micro, small, and not even micro, small, and medium enterprise. So medium enterprise, no benefit, only for micro and small, up to 50 crores turnover, we can take, or 10 crores investment in plant and machinery. So there, if I have got any dues, I have to pay them within 45 days. In fact, I have to pay them within the agreed period as per the contract, which shall not be more than 45 days from the date of acceptance or deemed acceptance. What is deemed acceptance? Deemed acceptance means having received the goods, if the purchaser has received the goods, and within 15 days, if he does not inform the supplier about the defect or otherwise, it is deemed to be accepted. So within 45 days, that is within the agreed period, I mean, he has to, the MSME enterprise has to be paid within the agreed period, which shall not be more than 45 days. Failing which, he has to compulsorily pay interest to him, whether or not the contract provides or otherwise. The buyer has to pay to the such a MSME vendor interest at the rate of 3 times the bank rate. 3 times the bank rate. This is what is told in the MSMED Act. And section 23 of the MSMED Act says, such interest which is paid by the buyer shall not be allowed for income tax. Shall not be allowed for income tax. So that is section 23. Having said that, so there are 90 sections, 89 plus 1 plus 5 chapters, and 44 clauses. But there are, if you open up ABC, like what we saw, 31 A, B, C, D, there are much more. Anyway, there are 44 clauses. Out of the 44 clauses, 2 clauses have been deferred even for this year. Although they are there, every year they are giving a 1 year deferment. Clause number 30C dealing with GAR and clause number 44 dealing with GST reconciliation. That I don't have to give. Now, what are all the changes? What are all the changes? Form 3CD. This is very interesting. We need to know, all of us know the due dates now. What is the due date? 31st December is gone. 31st December is gone. The next due date is 15th January. What do we have to do by 15th January? In the next 11 days, we have to file all the audit reports under the income tax. I don't call it as tax audit report because popularly tax audit report means Form 3CA, 3CB. Please understand, even Form 10B is also a tax audit report. 3CA, 3CB, 3CD, nowhere they said that it is tax audit report, but popularly we call it as tax audit report. Form 10B, which is to be required to be filed for a trust, is more dangerous than 3CD. Please understand. If you don't file 3CA, 3CB, the maximum penalty is 0.5% of your turnover restricted to 1.5 lakhs. if you don't file Form 10B in relation to a charitable trust, the entire exemption for such a charitable trust will be lost. And what is the implication? Please understand, what is the implication? If the hospital gets a turnover of 100 crores and has an expenditure of 90 crores, 10 crores is the normal profit. 10 crores is the normal profit. But if it happens to be a charitable trust, the tax that will be levied for losing the exemption will be on 100 crores and not on 10 crores. Because the income to a charitable trust is 100 crores. And this 90 crores is an application of income. So entire charitable trust is governed by section 11, 12 and 13. Charitable trust never come under our regular 28 to 44. They don't come under 28 to 44. If any of the provisions of 28 to 44 have to be made applicable to them, it has to be told in section 11, 12 and 13. For example, are provisions with respect to 40A3 applicable to a charitable trust? The answer is yes. Why? Because section 11 goes on to say that provisions of section 40A3 and 40A1A shall mutatis mutandis apply even to a charitable organization. Does section 44AB apply to section 44AB apply to a charitable trust? That is the question. The answer is no. The answer is no. That is why we say in the case of a charitable trust, I don't have to go in for a tax audit. Unless the charitable trust carries on a business for which the rules of business will apply, in which case they have to prepare a 44AB tax audit report. If they're doing entire charitable organization without any business being incidental to charitable organization also, I don't have to worry about it. Because it is incidental. It is not a separate thing. So we don't give the tax audit report in the case of a charitable organization in that sense. Okay. Anyway, that be it as it may. Now, why I wanted to harp on this particular point is, if you have any charitable organizations, please file your Form 10B at the earliest. Okay. If you file it on 16th, you may lose the benefit unless the date gets extended. Having said that, any tax audit report, it could be a Form 29B or a Form 10DA. I mean, whatever that is told, 30 days before or 1 month before the due date of filing, all those things have to be filed by 15th of January 2021. And please look at this. For filing the income tax return, I have got 1 more month's time. I don't know what I should do in that 1 month. After finalizing my tax audit report, my balance sheet is ready. And in all these cases where we are using the softwares, all the income tax return is also ready. That means I don't need that much time. But the department has given that much time for a reason. Why is that they have given a time? Because eventually 26 AS, a lot of SFTs are getting filed from various places. AAS is getting generated, dividends, interest income, your capital gains, and your defaults in TDS, which is being reported by me through the tax audit report. All these will now go and sit in my income tax return. Income tax department will give me my income tax return. They will give me my income tax return. I don't have to fill the income tax return. They will tell, this is your income tax return, according to us. In case there is anything more, you please declare. Or if you want to disown something because it is by mistake, it has been captured, you give us a sufficient proof as to say why it is not yours. So that is how the scheme is going to be in future. So this is all being done in that particular thing. So 1 month before you file your tax audit report, and thereafter income tax return, because the department only will prepare the income tax return based on various inputs, including tax audit report. That is the picture. Now, let us not worry about the objective of the department. Now, let us think of a client who has time to pay 40A1A disallowance. In our TDS, 43B. He has got time to pay. I was talking about this 18 lakhs payment of GST or a TDS until 15th February. But in my audit report, I have to tell what are the non-compliances under 40A1A and 43B. Now, please listen. If the assessee says, sir, I will pay it by 15th February, please give it in your audit report as though it is paid. Can I give it, sir? I cannot give it. I will say until the date of report, you have not paid, so you have not. But if he pays it on 15th February or 14th February, is he eligible to get the benefit of 43B or 40A1A? The answer is yes. How will the department know that he is eligible when, according to my tax audit report, I am saying that he is ineligible? Because intimation, the CPC will not know. The computer will read only my audit report and not his challan. So therefore, they have enabled the tax auditor to revise the tax audit report in all such situations. So that is one thing which has happened. Now, please understand, our institute always said, whenever there is a mistake which the auditor has found out, or if there is a reason for you to revise, you shall revise it. Okay, you shall revise it as a matter of duty from the auditor's perspective. But the income tax department has now told the auditor that when this is the point, Rule 6G bracket 3 inserted, on what date is that? On 1st of April, right? 1st of April or 31st of March? Yeah, 1st of April 2021, they have revised, provided for revision of tax audit report under 44AB for recalculation of disallowance under 40 or 43B if there is a payment after furnishing of the original report which necessitates recalculation of disallowances under section 40 or 43B. Clear, sir? Now, please do that once you file it on 15th February. I mean, I would always say, tell your clients that the last date is for 15th January only. Don't tell them 15th February. Then you don't have to revise it. But if there are some intelligent chartered accountants with the clients, or if, let us say, Kumar Guru sir is acting as an internal auditor for a company in which Mr. Meenakshi Sundaram is a statutory auditor, then Kumar Guru sir will say to the company it is possible, and Meenakshi Sundaram cannot say otherwise. So those are the various ways in which we'll have to deal. In such situations, we will have to alter the situation. Now, what are all the various changes that have happened in the preceding? 6 changes have happened, or rather 5 changes. Clause 8A amended to comment whether the assessee has opted for taxation under section 115BA, BAA, BAB was all there last year. This year they said BAC and BAD. So if at all a individual, because BAC is applicable only for individuals, not even for partnership firms, and HUF, and BAD in relation to a cooperative society, if they have opted for the reduced tax rates by giving up a lot of exemptions and deductions, which we have already seen in the earlier session. What are the various exemptions? They cannot take standard deduction, leave travel allowance, additional depreciation. They cannot take interest on self-occupied property. All those things, minimum, minor children, all those they have to surrender, including Chapter 6A. Most important thing is Chapter 6A. You cannot get. Then you will go in for the reduced rate of taxation. In that context, if they say, I want to choose that, you will have to say yes. Now, should I file a Form 10IE? Should I file a Form 10IE? Now, please understand, 115 BAC is applicable to all the individuals. Can I keep changing between the option? I will go in for the option of 115 BAC this year. Next year, I will go back to the regular scheme. Can I do that? I can do that if I don't have income from business. If I don't have income from business or profession. If I have income from business and profession, once I choose, I will continue under that particular option till the time I want to come out once. I can come out and thereafter I cannot get in to 115 BAC. That is how the structure of 115 BAC is. So should I file 10IE? If I happen to be an income from business case, then I have to file Form 10IE. Otherwise, it is not required. For a non-business person who has got salary income or only capital gains or income from other sources, he need not have to file Form 10IE. He need not have to file Form 10IE for coming under 115 BAC, because every year he can toggle between the options. Now, the biggest question that comes out is, I mean, in my own office, I had to see a lot of cases. This year, they are getting a 5,000 rupees benefit as compared to the regular scheme. Next year, we don't know what will happen. Should we opt for 115 BAC or not? We are telling this year, so you better opt for it. I mean, that's because we have to take, we cannot keep on postponing. So we don't know. Next year, maybe it may work against you. But this year, you got the benefit. This year, you are alive, you claim it. Next year, you don't know whether you will be alive or not. So better claim it. A bird in hand is worth two in the bush, and claim. Next, clause 17. Any questions on 115 BAC? Please ask anybody any questions. You please put it at the end. We can discuss on that. I'll finish off this. Clause 17 to include details of transfer of land or building for consideration less than the value referred to in section 43CA and 50C, and whether such transfer falls under the fourth proviso to section 56(2)(10) or second proviso to section 43CA inserted by the Finance Act 2021, allowing 20% variation in the consideration for transfer. Now, please understand, the changes in the tax audit report is all those changes which are in blue fonts here. Now, before I explain this particular clause change, let me explain what is 43CA and what is 50C. Now, if I have sold a property of guidance value worth 1 crore to Mr. Prabhakaran at 70 lakh rupees, now, if I am selling it as a capital asset, I will have to show in my books of accounts capital gains. Sale value is 1 crore, although the actual transaction value is 70 lakhs. And Mr. Prabhakaran has to show the difference between 1 crore and 70 lakhs, 30 lakhs as income from other sources under section 56(2)(10). Unless, of course, he happens to be my relative. I mean, there are certain exceptions. Under 56(2)(10), there are exceptions. I'm not talking about that today. Having said that, what if I happen to be, instead of a capital asset, I'm selling a business asset? 50C will not apply to me. 43CA will apply to me. 43CA is to a businessman what 50C is to a seller of an immovable property as a capital asset. But 56(2)(10) will be applicable irrespective of whether I am selling it as a capital asset or a business asset to the person who is buying the asset. Are we clear about these provisions? Now, one point to be noted is there is a 10% variation, 10% accepted standard deviation, which is permitted, which is permitted by the department. Now, what do you mean by 10%? If the guidance value of the property is 1 crore and I sell it to Mr. Prabhakaran at 90 lakh rupees, what is the sale value to me, sir? Meenakshi Sundara sir, what is the sale value to me if I have sold 1 crore at 90 lakh rupees to Mr. Prabhakaran? What is the sale value under 50C? Will it be 90 or 1 crore?
90.
Why?
1 crore.
Deviation is allowed to the extent of specific percentage.
Yeah, 20%, 10%.
No, I did not talk about 20%. 20% is an exception which is available only for a limited purpose. That is what is the next question. Generally, 10% standard deviation is accepted. So what it is, please understand, if I have sold it at instead of 1 crore at 90 lakhs, and I told you 10% is acceptable, that is not how we read the act. Sir, please go to section 50C, I mean, whatever, 50C, maybe 50C you can go to and read what it says. What does 50C say? The guidance value shall not exceed more than 110% of the consideration. So guidance value divided by 110% should be more than the consideration received. So guidance value is 1 crore divided by 110% is coming to 90.91 lakhs. That is why I took up this example of 90 lakhs. 90.91 lakhs is the cutoff and not 90 lakhs is the cutoff. Please understand that way. Mathematically, I mean, lot of real estate people are, we all know how real estate transaction happen. They always try to do it at the cutoff, and extra they take it in extra. And now a lot of companies are doing at the cutoff, considering this 10%. And this 10%, if they're doing this, if I'm selling 1 crore worth of property at 90 lakhs to Mr. Prabhakaran, the guidance, the transaction value will not be 90.91 in my books. It will be 1 crore only. However, if I'm selling it at 92 lakh rupees, if I'm selling it at 92 lakh rupees, then it will be 92. That cutoff is 90.91. That's what I wanted to say. Now, the next point they said is, this 10% will be considered as 20% if the transaction happened between 12th November 2020 to 30th June 2021, and the transaction value of that property is less than 2 crore rupees. Is less than 2 crore rupees. Provided I am selling it as a builder. I am coming as a builder, 43 CA. I am selling the asset as a first-time builder. That means to sell off my inventories as a builder. They approach the government saying that we are not, because of COVID, etc., we are not able to sell the inventory. So please give us some incentives. Means only for builders, not for capital asset. 50 CA, this is not applicable. Only for 43 CA cases, wherein again, if they buy and sell, it is not permitted. For first-time cases, where it is property is being sold for the first time, for such cases, it is allowed from 10% to 20%, both to the first-time seller and the buyer in any case. The buyer need not be a first-time buyer. He can buy it as a second property also. So under 56(2)(10) and 43 CA, the standard deviation from 10% to 20% subject to those conditions. So in that context, we'll have to give this particular details under clause 17. Next, clause 18. Clause 18 to include details of adjustments to return on value. What is the adjustment? Under section 115 BAC, BAD for assessment year 21-22 only. What does this mean? Please understand, if I am buying a plant and machinery for 1 crore and I'm using it for manufacturing facility, I can get 15% normal depreciation and 20% additional depreciation in the first year. This 20% additional depreciation, I will not be entitled to claim if I'm coming under 115 BAC. If last year, that means assessment year 2021, I had an unabsorbed depreciation, additional depreciation. Please understand, unabsorbed depreciation of 1 crore. I mean, I would say some 30 lakhs, and unabsorbed additional depreciation of, let us say, 10 lakh rupees. So regular depreciation 30 lakhs, additional depreciation 10 lakhs. Then I can carry forward additional regular depreciation even if I'm coming under 115 BAC. But additional depreciation of 10 lakhs, I cannot carry forward. But I need to add back this 10 lakhs to the opening written down value, and future depreciation will be on that enhanced figure. So clause 18 to include details of adjustments to return on value under section 150. So this 10 lakh rupees I added back to the opening. How much I should add it back is what is told under clause 18. This we had to do for all companies which were last time coming under 115 BAA and BAB for the first time. Of intangible assets due to excluding the value of goodwill of a business or profession. Now, whenever there were mergers and goodwill used to emanate during mergers, the depreciation on goodwill was an allowable expenditure. Now they have blocked it retrospectively from assessment year 21-22. So those of you who were claiming that, very far and few, so the auditor has to say what is the cutoff figure on which depreciation will not be eligible on goodwill. So that is what has to be told in clause 18B. Clause 32, to include details of brought forward losses, bar depreciation allowance, having regard to the special provisions of 115 BAC, BAD, in addition to section 115 BAA. That means I have to tell them what are all the deductions and which carried forward deductions, brought forward deductions, like for example, additional depreciation of 10 lakhs. They cannot carry forward is what I have to specifically say. So other things are also, whatever I cannot brought forward cannot be claimed, has to be told. Clause 36 omitted. Why, sir? Why? What was clause 36 dealing with? Dividend distribution tax. Dividend distribution tax is now abolished, and it has gone into the classic manner of getting taxed in the hands of the receiver. Earlier, when the company used to give dividends, they used to deduct dividend distribution tax and pay it. It was not like TDS, it was dividend distribution tax was paid. Now, the recipient of the dividends will have to pay taxes. So therefore, dividend distribution tax has got abolished. So clause 36 need not be commented, but there are certain points with respect to dividends. Point number 1, if I have received dividends, should I estimate my how much dividends I will get and pay advance tax accordingly? Not possible. How will I know how much dividend the other companies are giving? So they have given me a rebate for 234B for calculation of, 234C for deferment of advance tax. For deferment of advance tax, my advance tax with respect to dividends will start from the subsequent quarter from which I have received the dividends. Therefore, in the income tax return, there are 4 columns, 4 blocks. I have to say in which quarter I have received the dividends. Just like capital gains. Capital gains also I don't have to pay advance tax. I have to pay tax only when the sale happens, the subsequent quarter onwards. I don't have to pay the entire capital gains tax. If I paid it in third quarter, then only 75%. The balance 25% I can pay it in the 4th quarter. So that is how the dividends are also built up. The most important question, with the dividends getting taxed in my hands, will section 14A relaxation be applicable to me? Now, what does that mean? Now, whenever I used to invest in shares, if I have taken any loan, for investment in the shares, the interest on such loans were not allowed under section 14A, because they were saying that any expenditure incurred to earn an exempt income, is not allowed for income tax purpose, because the income is exempt. The expenditure in connection to the exempt income is also not allowed for income tax purpose. So section 14A is okay. Now that dividend is taxed in my hands, will the expenditure that I incur on earning such dividends, say for example, I am having some investment officers in my company to whom I am paying salaries, rentals and interest, can I claim that as a deduction against my dividend income? Yes or no?
Can claim, but there is a cap.
What is the cap, sir?
I think it is 20% of the dividend.
So on what? Can I claim my salaries, rent, or anything else?
Interest.
Please understand.
Section on account
If I
of
have yes. So point I wanted to say is, if I have received 50 lakh rupees, if I have received 50 lakhs as dividends, and I have spent 40 lakh rupees towards interest, salaries, and whatever, rentals, I cannot claim, first of all, 50 minus 40, because under section 56, 40 lakh rupees will be taxed. 50 lakh rupees dividend income will be taxed. Under section 57, they have put a cap. How much? 20% of the dividend income restricted to the actual expenditure, only towards interest expenditure. So salaries and rental out, I cannot claim. Only 20% of my dividend income, my 50 lakhs is my dividend income, and 20% of 50 lakhs is 10 lakh rupees. So 10 lakh rupees or actual interest, whichever is lower, can be claimed as a expenditure. No salaries, no rentals. So this is the second point on dividends. The third point on dividend, if I am a high net worth individual, having my total income at 20 crore rupees, there is a what is that? Surcharge. So what is the surcharge, sir, today? What is the surcharge? There is a 7% surcharge, 15% surcharge, 37% and 42%. I think something like that. I don't remember the surcharge like that, but I can tell you, I have it in my system. What is the surcharge rates? Yeah, surcharge. Yeah, surcharge. For individuals, what is the surcharge?
That more than 50 lakhs.
50,
It is
10%.
up to 50 nil, 50 to 1 crore 10%, 1 crore to 2 crores 15%, 2 to 5, I think 2 to 5 it is 25%, and more than 5 it is 37%. So we have 10%, 15%, 25%, and 37%. Now, in my case, I took the example of 20 crore rupees. Now, if I am receiving dividend income, please understand, if I am receiving dividend income, they have capped the surcharge to 15%. So within that 20 crores, if 5 crores is my dividend income and 15 crores is my other than dividend income, on 15 crores, I may have to pay surcharge at 37% also. But on this 5 crores, I pay dividend, I pay surcharge only at 15%. So these are the 3 points on dividends that we need to know. So that gets us to the end of almost 3 hours, but I would keep it open for questions on the tax audit report. Yes, sir. Any questions? I am prepared to take in the next 10 minutes. Yeah, I think the question that came out,
allowability of surcharge under the income tax. There are some controversial views, sir. What is your view, sir?
No, surcharge is definitely not allowable. Cess, there was a possibility.
Yes.
Cess, there is a possibility. There are a lot of high courts which have held that, Punjab and Haryana, lot of high courts have held. I can tell you which are the high courts which have held also.
Some Calcutta ruling is also against, I believe, sir.
Yes, the Calcutta tribunal has come in heavily. What they said is, they took up, when the cess was introduced, they said that cess is a sort of a surcharge, is what the budget memorandum said. So considering that cess is also a surcharge, they said it is not allowable, but all the high courts have given in our favor. So we are leaving it to the client to decide whether he wants to take the risk. So for the moment, it is very volatile. Yes, sir. Next question, sir.
There is a question in the chat box whether Form 10B.
Who asked this, Sundar? You mentioned about this, cess?
Yes, sir.
Yeah, that's a very good observation. Very, very good observation. We were also, in fact, I would have started off with that. But then I addressed Calcutta recently, and there they said that their own, and they brought it to my knowledge. Otherwise, cess, we thought we will claim from this year onwards, but then now we are scary about that particular judgment of the Calcutta tribunal, that is, Calcutta tribunal decision, which says that. So for the moment, we said it's not a good thing to happen because we may lose. Yeah.
Question that is there in the chat box is whether Form 10B is available in the portal. I think it is available, sir. We can take what forms are available, what forms are not available, sir. So there seems to be
forms are available, but I think it is not on JSON, so therefore it is possible to file. I had asked my office to file today. Anybody filed? Anybody filed today?
Yesterday.
Anybody? You have filed? You have filed yesterday?
10B, yes, sir.
Chirag?
Yes, sir.
Did you file 10B today?
No, there is some error when filing 10B.
Mm-hmm.
Some website issue which is coming after the audit and all.
But then, Mr. Sundar, you have filed yesterday?
Online, we have gone and filed, sir. See, through the software, through popular softwares, it is not accessible, sir. They're saying form that utility is not this one, but online.
Very interestingly, 3CA and 3CB, directly it is not allowing, but through softwares it is allowing. So 10B, what you are telling is through software it is not allowing, and so Chirag, I think that please try accordingly. Okay, take it. So this is how it is. So some you'll have to go direct, some you have to go through the software. I think this is the problem of a chartered accountant, unfortunately. Which the finance ministers and the press, they are giving all saying that so many income tax returns are filed. We don't have a unified voice. They have a unified voice. Yeah.
In fact, Form 10 in relation to trust is not available. So that accumulation of income for specific purposes, it's neither available in the portal, but 10B has to be filed, means we'll have to file that and then only go with, for 10B. So in that case, what would be your recommendations? Wait for extension is one way. Can we file the physical forms with the jurisdictional officer and proceed?
Yeah, I'm sure the thing will be extended. That is the, what you're suggesting is the next best. We'll have to now probably take up this as a grievance and write to the finance ministry. Please put it on record, take it on record, and say that
has been raised, sir. But both the times they're just closing off the grievance. Sir. That's the problem, sir. So we're not able to.
I know. No, but we'll have to write it to the PMO also. We have to write it to the PMO. Maybe they may take it seriously.
Sir, you said 20% interest expenditure can be claimed against the dividend received. But if you don't have...
No, sir. I said 20% of the income, dividend income restricted to actual interest expenditure.
Suppose if you don't have the record, whether that loan has been borrowed, shares has been purchased out of loan borrowed. If you don't have a record, then whether that interest can be claimed, sir?
So I would say the onus to prove that it is for that particular purpose is on the assessor. The onus to, you have to prove that. You have to prove that it is out of that particular.
If shares were purchased very
all the while,
back,
sir, all the while, what we used to say is all the interest that a businessman carries is for the business purposes only and not for earning the exempt income, is what we were proving. As long as I had share capital, as long as I had share capital in excess of the investments, I used to say share capital was used for investment. So therefore, the concept of direct borrowing, yes, but indirect borrowing, we will always saying it is all towards business and not towards exempt income. That is what we were telling. So you are telling the other way. Now that it is allowed, can I use that? But still you will have to have the proof. Next, sir. Chetan has asked, loan and payment is the difference. What is the, I don't know whether it is in relation to some particular context. Chetan, can you elaborate what it is? I think Chetan is very active. Is the form 10B available on the portal which we discussed? Not able to file 10B due to non-availability. In such case, what to do? Yeah. If there are no questions, Mr. Prabhakaran, I think I hand over the proceedings to you.
Okay.
Thanking you for allowing me to come to Pondicherry virtually, if not physically, and interacting with such learned members as Kumar Guru sir, Mr. Meenakshi Sundaram, and Mr. Ananda. It was a true Ananda for me to be in the midst of the learned professionals of Pondicherry. And I would certainly look forward to be physically present with you someday later. Thank you so much.
Thank you, sir. Thank you, sir. Thank you for your wonderful presentation of the changes in 3CB, 3CD in a nutshell, and also covering all other important amendments and issues, sir. Thank you, sir. And we'll love to hear you on a faceless assessment, as you said, after February 15th, sir. Definitely we'll plan and we'll make it, sir. Thank you, sir. And now over to Vashni Madam for formal vote of thanks.
Speaker of today's program, CA GURURAJ ACHARYA, Chairman of Pondicherry Branch, C.V. Prabhakaran, Pondicherry Branch Managing Committee members, panel members of the program, CAK Kumaraguru and CAV Meenakshi Sundar, and esteemed fellow members of the profession. Good evening. It is my privilege to propose a vote of thanks on this occasion. As the speaker rightly started the program with a prayer by invoking the blessings of Lord Ganesha, I first thank the Almighty for the smooth conduct of the seminar. I express my gratitude to the speaker for taking his time from his busy schedule and joining us virtually today. I thank him for the excellent and lucid presentation. The session was interactive, informative, and full of knowledge. I thank the panel members for their presence, interaction, and participation. I thank our branch in charge, Mr. Pushparaj, for the excellent support provided. Lastly, I express my heartfelt thanks to all the members for their active participation. Thank you, everyone, once again for making this program a successful one. Thank you. Thank you.
Thank you, Mr.
Thank you.
Prabhakaran.
Thank you, sir. Thank you for your.
I always say, I wish to come to Pondicherry for knowing the Chidambara Rahasya, to go to Chidambaram. And today I also realized that faceless assessment is also like a rahasyam. You know, faceless assessment, we don't know what is the rahasyam behind that. So thank you so much. Looking forward to meeting you. Thank you.
Thank you, sir. Thank you, sir. Yes.